which takes a lot of preparation, a lot of hard work, but then hopefully is a very rewarding experience. I guess I wanted to just get the discussion going, talking a little bit about what makes a successful IPO. So when a company is thinking about whether they are IPO ready, what are the key factors, either from an investor perspective, as you look at it, Adam, on the stock exchange side, or Johannes, in your case, when you're working with your portfolio companies, what are the key variables that people should be thinking about in terms of IPO readiness? I don't know, do you want to get started, Adam?
Well, maybe before we dive into that, just to explain, I cover our Nordic markets, and which is Stockholm, Helsinki, and Copenhagen, which is the European ecosystem. We can talk a bit about that, because I think one of the challenges is that the perception in Europe is that you have to be huge to list, whilst there is an ecosystem here which is developing and which is interesting for smaller companies. So that's one struggle that we're seeing. And the other aspect is that we work with European companies listing in the US, and those typically are quite large in size. And I would argue that what we typically say is that an IPO really comes in to replace a C or D round kind of experience. And in fact, what is happening is that the private markets are so strong now that they're helping companies to stay private longer. There's so much capital in the private markets. But what you have to keep in mind is that when you and you know this very well, is that when you raise more and more sophisticated capital, the requirements become bigger. It's one thing when you go and ask your family and friends for money and the first round, but the B, C, D, and you're talking about I rounds or J rounds or G rounds. These are almost public pension funds that are going into private capital, but they're not doing this lightly. They're putting a lot of requirements on these companies in terms of governance, in terms of financings, in terms of how they manage their company overall. And what we typically say is the gap between that kind of a round, late stage round, and an IPO is not that huge, because you're essentially you should be running your company almost as a public company. And you look at Uber and the situation they're in now. If they would have had their governance in place, that's a wakening up call for the private markets. Mm-hmm. So my question is, you have to be predictable. Your business has to be predictable. It has to be transparent, and you have to ideally have comparables in the market so that you can compare how you're performing towards others. And ultimately, you have to have a CFO that really knows his business in terms of how to manage the company, not only as a private company, but also from a public perspective. It doesn't have to have public market experience, but he has to understand what it means to interact with more investors that are not typically the ones that he's seen on an everyday basis.
Right. I will come back to that point around the CFO and the role of how you communicate with public markets.
Those were some highlights.
Johannes, what's your take on this?
Yeah, I probably haven't seen enough IPOs to give a systematic answer, but from my observation is, and it's not my core function, but the companies that went public successfully, they all had this kind of unique magical mix of rapid growth. They had this consistent progress also that they can show across their core KPIs. I think that's very important, this consistency, which is also for each company a strong signal that they understand their business and are also able to predict it and give guidance around it. But I think ultimately my learning from this whole IPO is every company is so unique that it's very difficult to give generic guidance there. The only person who could answer that question rightly is probably you.
Don't throw it back at me. I mean, I think there's many factors. But I'll give my view in a minute. But let me just build on something you said, Adam, which is the importance of the CFO. Yeah. And when you're going public, there's obviously a process during which you're marketing your story, and there's a price discovery in the public market through a book building process. And that is all predicated on certain financial expectations, which are kind of, investors are guided towards. Yes. How important is it in terms of how you think about those projections, what expectations you create in the market, and more importantly, how you deliver against those expectations once you start trading, and you come with your first quarter results, second quarter results once you've public.
I think Amazon is a good example. I mean, if you have a good vision and you can communicate that vision to your shareholders, and there's a strong belief behind that you're gonna, you're focusing on growth and not profitability, then you can get that message across. And there are investors there that are looking for growth as long as they believe in the leadership of the company. But you have to create KPIs that you can measure and that are understandable in the market that you can live up to on a regular basis. It doesn't necessarily mean that you have to beat financials every year, every quarter, but you have to be able to give clear guidance with regards to what your long-term aim, because the typical saying is that the public markets is very short-sighted. It's not, you're never stronger than your last quarter. But I think Amazon has been as a good example, and there are a few others, Salesforce and others, that have been focusing on growth in the public markets and using the public markets to grow, both from a financing point of view, through acquisition, and so on. So the CFO has to really make sure that he's transmitting, and the CEO has to make sure that they're transmitting what is their vision, how are they going to achieve that, what are the key KPIs that they're trying to achieve. At the end of the day, I think the markets love growth, but I think the markets are getting more and more eager to see a road to profitability. And I think that's an important message for growth companies is you have to be able to communicate, if you're focusing on growth, how would you achieve at least profitability if you're not achieving it today? Because there's the opportunity cost of focusing on growth is potentially impacting your chance to achieve short-term profitability. Right. So those are some things. But you have to set procedures in place. It's a lot about procedures. You have to make sure that you have a good interaction with the market on a regular basis. And you have to be predictable and concise with regards to your vision of where you want to bring the company.
Right. Let me just build on, Johannes, you talked about the importance of growth and exciting growth around the positioning of these companies. And Adam was just talking about how you balance growth versus profitability and you get that story across. As you know, Rocket went public and a number of the portfolio companies have gone public. That has been a central debate we've seen play out. Can you just go a level deeper in terms of what in practice can companies do to articulate that story, particularly if they're loss-making? I mean, if you're loss-making, does it mean you can't go public? Or how quickly do you need to be at the break-even point, and how do you articulate that story?
Yeah, the story that, kind of this word story, I don't like it actually, because it sounds, it's very airy, but in the end, you need to be able also for communicating with investors to explain what your company is doing in a simple, straightforward, and engaging way. So kind of equity story, you could call it. And I think that is something that is very important in the process, but it's also simple, because in terms of timing, when a company should go public, I think the successful ones, for them it was not difficult to write it down and to really nail it down. What is my company doing, not only yesterday, today, but also in the next years? So it's simple but very important. So this equity story and being able to explain it is very important, but it's ultimately simple for the companies that are ready.
Let's talk a little bit about one part of the story is how you articulate the equity story, the positioning. In my experience at least, things which are relevant are things like the competitive position in the market, the sort of leadership you may have, how you relate to competition, scale, how proven the business model is, things like in articulating the unit economics, you talked about KPIs. Would you rank any one of those elements particularly above the others, or would you think that as a whole package is what you basically need to focus on?
Yeah, I think every company that reached this point where it considers going public or not and other options, they have had so many meetings with investors. Right. Private meetings, semi-public, they had hundreds. I don't know how many. And the person who knows best how to explain this is the CEO. So that's what you're describing. You're describing actually also a Series A pitch deck. So explain these are all the components you need to address, and you cannot drop one. They are all very important.
So no changes from Series A all the way to IPO status.
Of course, kind of if you think about how much time you have to explain it and how much data you also have, because after 6, 7, 8 years you have so much data to show your track record and your consistency, etc. So you have much more to work with, more tools. But ultimately, it is the same thing.
Right. You talked about the amount of investor meetings that companies have in the run-up to an IPO. I mean, maybe a question for you, Adam, what you hear from investors in that respect. We've seen a fair amount of innovation in terms of being more imaginative and creative around how you engage with investors, and not just do, 10, 15 years ago, we just do the classic 2-week roadshow where for 10 days you'd be out seeing investors. Now, the run-up in terms of educating the investor base is much longer, and there's early look meetings, and there's pilot fishing meetings, and there is investor days. What do you hear from investors? Is that working? Is that a good practice?
Yeah, I think the fact that private capital is so strong now is largely because a lot of the public players have gone into the private markets because they're looking for growth. So they're getting more used to dealing with the private markets, and they're more interested in the private companies that potentially could transition into public markets. And in the US, they actually launched something which is called Jobs Act, which made it easier. One aspect was to file confidentially, so you could actually go out and talk to investors confidentially with them to get an understanding who are your potential investors, what are the investors looking for, and so on. And when I meet companies that are looking to go public, I tell them, try to meet investors as soon as possible, because it's a good exercise for you as a company to understand what is the public investor looking for. Because if you're not, you might not end up going for an IPO, but it's an interesting process for you to manage your company in the direction of an IPO. Because I think one key thing that comes out of all the IPOs is that most managers end up saying that they've never run the company better once they're public in comparison to when they were a private company. So they've actually come out being a better company. And a better company is not necessarily only the commercial aspects, but it's also focused on the governance and how you manage. So interacting with investors early, testing the waters, and just getting an understanding is an important aspect. And I think that's you learn a lot from that dialogue. And of course, as you're preparing for an IPO, it becomes even more important.
Right. Maybe Johannes, just building on something Adam said, which is how much the private funding market for technology innovation has grown. That is return companies within the Rocket Internet universe. When you think about it, when is the right time to take a company into that public stage versus continue to funding it privately, either directly through your own capital or third-party capital? How do you think about that decision, timing-wise?
I think most importantly, kind of each company decides that, and they need to be in control of that. One can just kind of be there with support and some best practices. But overall, what you're describing is the case. There are more options on the table, and that's great for companies. Nothing I can add.
Right. I just add one thing to that. I think it's this public versus private is an interesting dynamic because one thing that the IPO creates is a visibility and awareness in the public market from a commercial perspective, which you don't necessarily get as a private company. So I think when you're starting to approach after a C round, then you should start considering the options, And I think the challenge that we're facing with the European markets and the IPO markets is that it's become so complex to IPO in many dimensions, so that you have to reach a certain size to justify IPOing, both from a commercial point of view with all the advisors and everything, but also from a perception point of view. And I think that's the struggle between the going public and remaining private. And I think the opportunity is given that private money has moved in to support that growth. I think one thing that is concerning with the IPO market, and we're focusing on in the US, is to make it less complex. Right. And what we're seeing in Europe is that, for example, in the Nordics, is that we're seeing smaller companies come to market. And it's an interesting alternative for those companies that are not maybe the superstars in each portfolio, but are showing good growth and are looking for liquidity. Because at the end of the day, employees, early investors have been there for a long time. And it's important to be able to create liquidity, and at the end of the day, maybe transition to a different ownership structure, which allows you to focus on growth but still remain on control. So there are many different aspects to this, because we tend to talk about very large IPOs, but if you look at the Spanish ecosystem, there aren't really that many large IPO candidates, for example. But could IPO be an alternative for those smaller ones? I think so.
So on that topic, and particularly in the case of NASDAQ, given you manage exchanges on both sides of the Atlantic, how do you think about, or how should entrepreneurs and shareholders think about listing venue? I.e., do we take our company public in our domestic market, call it Madrid Stock Exchange, one of the other stock exchanges around Europe, or for that matter in New York?
I would say that on the day of the IPO, right now with low interest rates and everybody looking for return of investment and so on, Europe, any public market almost any public markets will give you a good valuation. The challenge that we have in Europe still, which is bigger, which is less in the US, is that you have more analysts, you have more peers, you have more coverage, you have a deeper market. So once you are a listed company, you have more people to talk to which understand your business than potentially we have in Europe. So that's a European issue that we have. That in itself is not enough to justify going to the US, but it is a reason. The other aspect is, if you have a large commercial success in the US and your growth is coming from the US, then doing a IPO in the US could strengthen your visibility and your commercial reach in the US as well. So that's an important aspect besides the valuation and whole dimension, but just being visible in the US through an IPO will help you. Because I was interviewing someone the other day and they were saying, the day before I did my IPO, our sales guys were calling around saying, listen, we're a young innovative company, we're not public, we're more flexible and so on. The day after they'd done their IPO, we're saying, listen, how can you trust this startup? We are a listed company, so use that asset. It is an asset, and that is an asset both for acquisition, for commercial growth, and of course, being listed in the US, it's the biggest financial market. But we only have a handful of those opportunities coming from Europe. And being a European, I want more companies to list in Europe because we need that ecosystem. I think that's what Rocket Internet has done so fantastically well with the Samwer brothers and ourselves, focused on Frankfurt as a venue of creating that. The other aspect is smaller companies can IPO, and that's what we've been focusing on in the Nordic markets to build that growth market. So we have something called Nasdaq First North, where smaller companies can IPO, because at the end of the day, it's good to have alternatives. And I tell startups or growth companies that when you reach the C or D round, look at the alternatives. It's a good negotiation thing when you go to the negotiation table to have alternatives. Right. And we've done 80 IPOs in the Nordics now, and all of these are below 600 million euro. And that's an interesting ecosystem, especially in the gaming and betting community and tech community, which is developing. And Germany is trying to develop that with scale, and it's a very difficult process to create. So all these are things that filter into where.
Let me come back to size in a minute. Johannes, anything you care to comment around the listing venue, how that's played out for you guys?
Well, I would like to go back to something Adam initially earlier said, kind of around younger companies just meeting with public investors as early as possible. And I think it's a very good recommendation to all companies, because it's incredibly helpful to understand how outsiders, and I think the public investors, they like to do it from my experience. It's just personal, but they are very interested, they like to do it, and they are very open to provide honest feedback, and can everybody encourage to do that.
Absolutely. I think I would completely agree with that. I think our experience has been the earlier you start engaging with public investors, the more time you give them to relate to you, to understand the business, particularly if it's a new business model, which is not particularly well followed in the public markets. And you actually create a track record. One of the reasons people talk about an IPO discount when pricing an IPO is precisely the lack of track record in the eyes of the public markets. And if you start engaging early, you start communicating how your business is performing. If every time you come back, you have news to tell, you've actually met or exceeded your objectives, that creates a degree of trust, to your point, Adam, as a private company, even if you're not listed. I think that's a very good recommendation. Yeah. Johannes and Adam, then maybe going to size, because it is a question we as an advisor get all the time, which is how big does the IPO have to be? You've talked about the ability to do smaller IPOs. You talked about many IPOs getting done in the Nordics. I think you were talking 600 million, that's probably market cap, but the actual free float was much smaller, probably 100, 150. Yeah. I mean, I'd like to challenge you a little bit on that, in the sense, when we talk to public investors, and maybe it's the larger spectrum of the public equity institutional investor base, they typically will tell us we want to see 300 to 400 million euros of free float in terms of the IPO size. And the main reason is they want liquidity. And in fact, the bigger the transaction, typically, you may actually be able to drive a bit of a premium on the valuation side, just because of that extra liquidity. How do investors think about those smaller deals? Why do they invest? Are they not worried about liquidity?
Listen, I think it's a culture issue, and it boils down to, as I call it, equity culture. In the Nordics, and again, this is a phenomenon that's not prevalent in the rest of Europe. In the Nordics, 50% of the households own shares. So when we sit at the breakfast table, we talk about companies and investing in shares as a potential way to make money. And there's a risk appetite. That means that around that ecosystem of a strong retail market, so 80% of retail owns shares indirectly or directly. And it's pension funds and unions and everything. Around that, you have smaller investors that have built up a business in terms of supporting companies that are potentially using equity-driven investment or funding. And then you have smaller funds. One big challenge that you have in Europe is that these funds that typically invest are very big. So when they want to invest in something, they need big tickets to make any move or impact on their investment fund. And I think this is one thing that we have to encourage in Europe, is because that's one of the strengths of the US market. It's fundamentally an equity market. So I think we have to, in Europe, encourage equity investments overall. And I think governments have typically been very cautious about this, because it means that households are taking risk.
Yep.
And they don't want that. So they're protecting you from that. So they want more depth-driven culture. And if you don't create that, then you have the same issue as in Germany. Deutsche Börse is launching something called Scale, which is a growth market. And the key issue there is you can launch whatever you want in terms of requirements and lowering the requirements. But if there's no demand underneath and understanding of what it means to invest in equity, you can't support companies. So you need the advisors, you need the ecosystems. This is what we have in the Nordics, and we're starting to see more and more international interest. So if the fund is smaller, then if the ticket is smaller in terms of the raise, it's still a significant investment for them. Yep. And that's what is important, because you want a good spread of investors, but you want long-term investors, not investors that are just going to buy and sell, but companies that are going to buy, investment funds that are going to buy and hold the company long-term, because they become the partner of the company as a listed company. And these are things that need to work in an equity system to make it viable for smaller companies to come to market. And it's not working in the US, it's not really working in Europe. It traditionally worked in the UK on AIM, but it's lost momentum there. But the 80 IPOs that we've seen in the Nordics is driven by that. It's smaller funds, smaller companies, but still growth companies. We've had companies come in at $500 million valuations, raising $100 million, and growing to $2 billion companies on the exchange over the last 2 years. We were just talking about that before. And this is inspirational for many other companies, and this inspiration becomes a drive.
Right. Just got a couple of minutes left, so maybe just last topic I want to talk about a little bit is, sometimes we get the questions around our founders who've been really the main driver of the business success, capable and ready to then become more professional type execs in running a public company. Is there any sort of change required in that respect in terms of how founders think, how they've been managing the business to the extent they've continued to do so at the time of IPO? Johannes, do you have any thoughts on that in terms of how that has played out in the companies you followed?
I think I'm a big fan of founder-led companies, and I believe that a skill set on public markets is something that can be acquired, and there's also a team that can help a lot, but it also it requires attention and time from the CEO. But ultimately, I think these young technology-driven product vision companies, they benefit so much from being run by the team who kind of originated the company, that I'm a huge fan of that.
Right.
I mean, Mark Zuckerberg, Jeff Bezos, all these guys are founders, CEOs and drivers of their own companies. I agree with you. Make sure you have someone who really understands the CFO role. But it doesn't mean that the CFO role cannot be a part of the founding team. There are good examples of that as well. But that is talent that you can acquire. But having the founder as the leader of the company with the vision, that's something that is a key asset for that company. And if they can deliver on that over time, it will also reflect in the ambition for the investors to be a part of that story.
Excellent. See, we've just run out of time, so right on cue. Thank you both very much for your time and sharing your thoughts here. Really appreciate it. And thank you everyone for attending the session. Thank you.
Thank you.
Thank you very much.
Excellent. Thanks a million, guys. A super important topic and highly specialized. Some time ago now, almost 18 months ago, one of our portfolio companies, Alien Vault, actually publicly expressed that they're preparing to IPO in the US as well. Hopefully they'll be one of the first original Spanish candidates on the NASDAQ. We'll see how that goes. And curiously, actually, we've been through the process in the past, and it's super rigorous. We've another portfolio company out of Adara Ventures on AIM in London, a company called Loop Up, and it's a roller coaster. It's a really emotional journey, I guess, you know, looking at the stock prices every other day, and it's a totally different road and route from a private company to a public company, I guess, and everything it entails, but an incredible opportunity and a very valid option for entrepreneurs in Spain and right across Europe as well. I'm really excited about this next session. I mean, I love all the content, right? I get to kind of put a lot of this together, so it's really difficult for me to kind of find talks that are my favorite or my best, but we have been working, as you know, with Banco Sabadell for many, many years now on consecutive editions at South Summit, and these guys are really changing the paradigm in terms of how they're innovating with entrepreneurship, opening open innovation programs, investing in external companies, building innovation departments internally. And I'm thrilled about this next session. They're going to talk to us in more detail about how they're rethinking innovation and how they're building internally different capabilities around entrepreneurship. It's with my absolute pleasure that I introduce to the stage Chief Innovation Officer of Banco Sabadell, Rüdiger Schmidt.
Muchas gracias. Buenos dias. Welcome. Good morning. I would like to talk to you today a bit about what we're doing in Banco Sabadell with regard to digital transformation. First, let's have a look what is really going on in the financial industry. And if you take a closer look, people and companies still need financial services to fulfill their goals, which is matching borrowers and lenders, which can be a deposit taker and somebody who needs a mortgage, which can be equity or bond issuing of companies, or new forms like crowdfunding, crowdlending, etc. But at the end, it's matching borrowers and lenders. Then the function is manage risk. Nobody wants to run high risks to lose his money. Provide services, day-to-day services like payments, cash management. Help to control financials, help to control liquidity, protect money, and help to grow money. And the attributes the clients value most remain the same, which are security, reliability, trust, transparency, and efficiency. So, why should there be a paradigm shift? Well, things are happening. First of all, the financial sector is on a at least temporary diet with regard to profitability. We have a scenario of lower for longer interest rates. We have margin compression because of high competition, so it's not that fun currently to make a lot of money with a bank. Second, the commoditization. What we see now in the financial industry happened a few years ago in the telco sector. Some of you may remember that we paid for minutes in phone calls or for minutes using internet. Today all is flat rate. And we will enter into the same in financial industry. So payments will be flat. If one of you have the idea to have a startup, a fintech for payments, you should have very good ideas about additional services like credit, insurance, or whatever smart idea, because just with payments in a few years nobody will make a lot of money anymore. Then we have the new players, the GAFA. We should add 1A, which is Alibaba and Alipay, who especially in Asia are really rolling up financial services. And of course the fintechs. which either have a horizontal service and intermediate the connection to the client, the relationship with the client, or they are vertical and take one juicy piece of banking like foreign exchange, foreign transfers, optimize that and get better margins out of it. Then we have the regulatory pressure. Since financial crisis, we are spending significant amount of money in complying with new regulations, which on one side protects us a bit because who wants to enter in that market needs to fulfill the relation. On the other side, it hinders us on investing more money into innovation. And then, last but not least, the technological quantum leap, which you know best. Here, only two technologies which will transform banking business definitely in the future. One is cognitive, machine learning, deep learning. There, all services which are knowledge-based, like investment advice or trade finance advice, definitely will see big changes. And then blockchain, which definitely will substitute on the long run all the infrastructures which require a clearing mechanism, a third-party mechanism like trade finance as well, or custody business. And our clients are changing. It's the millennials, but not just the millennials, who are better informed. They demand simplicity. We are changing from a sell market to a buy market. We are not longer pushing, selling, but the client buys products. Less need of physical branches. Let me correct, it's less use of physical branches. If you ask people what are the main factors to decide for a bank, still, and that goes through all generations, proximity of branch is an important factor, even for millennials, even if they don't use it anymore. Everything for free, as I said before, commoditization. And experience is more important than property in these days. So people are looking for experience and not for property, which may cause huge shifts in credit, consumer credit, mortgages, etc. So what does it mean for us? The risk for the banks is that they become invisible. We don't have a risk of dematerialization because our products are by definition digital, except the passbook for your deposit, which you still may have. So it's not like the audio industry where the CD disappeared or video DVD disappeared or the digital photography. There's no dematerialization risk, but the risk of disintermediation by comparison sites, for example, or by aggregators who try to disintermediate the relationship with our clients. And this loss of direct client relationship by bank services in introducing new services into existing ecosystems and platforms like Apple Pay, Samsung Pay, Android Pay, whatsoever, also tries to disintermediate the banks. We still perform the payment, but we don't know any longer what was it for, because Apple keeps all the data of that payment. So it's not just about making money with it. Even more important is having the data and understanding the customer behavior. But we see all these changes rather an opportunity than a challenge. Bank Sabadell has a long transformation history. We were a decade and a half ago number 47 in Spain. We are now the number 4 bank of private banks in Spain. We are front runner in digital banking. We were the first ones offering an open API for startups. We had the first blockchain hackathon this year in the 4 Years for Now event with Vitalik Buterin, the founder of Ethereum. We are founding member of the first blockchain consortium cross-industry in Spain. And there is this beauty of legacy. So beauty of legacy in terms of scale, data, traffic, transactions, brand, and culture we bring with our bank. So let's have a look what we are doing in the digital transformation. Only 3 products and services this year. We launched True Siri banking. A lot of banks offer you Siri services, but the only thing they do with Siri is launch the app, and then you have to finish the transaction in the app. With our mobile wallet, you can do money transfers real time, just using Siri without using any app. And what is even more important, you can even request money from somebody else with that Siri launcher. Another interesting thing is digital shots, which is a complex event processing architecture we built based on our big data, where we are able to show relevant, easy, without friction, non-intrusive events, like in this one where somebody could have a credit line. With this intelligent selling, we achieved a 5% click-through ratio, which everybody who is in digital marketing knows it's a fantastic value. And we launched a big data product this year, which I would like to show you in a short video.
En el siglo XIX, el físico matemático Lord Kelvin dijo:
Lo que no se define no se puede medir. Lo que no se mide no se puede mejorar. Lo que no se mejora se degrada siempre.
En Banco Sabadell compartimos esta misma opinión. Por ello, ponemos a tu disposición la plataforma online Kelvin Retail, un servicio para el pequeño y mediano comercio con el que puedes obtener y analizar de forma muy simple y clara información de valor para tu negocio. Como conocer, por ejemplo, la edad de tus clientes, su sexo, de dónde vienen, si son nuevos o los de siempre. Hacer un seguimiento detallado de tus ventas por horas, días y meses. Saber la media de días que tarda un mismo cliente en volver a comprar. Conocer tu ticket medio de ventas. Y lo más importante de todo, poder compararlas con las de tu competencia más cercana. Así, con información actualizada, objetiva y fiable, puedes tomar decisiones que te ayuden a aumentar tus ventas, tu rentabilidad y conseguir todo lo que te propongas. Porque, como dijo Lord Kelvin,
si algo se puede medir, se puede mejorar.
So that's how Kelvin Retail looks like. Now the new version even supports e-commerce shops or hybrid shops, which have physical shops and e-commerce business with this kind of personalizable dashboard. We already have around 2,500 shops using that service, where we are matching our data from the acquiring business, from POS terminals, and the card transaction from the issuing business. The next thing we have launched based on that is Kelvin Atlas, an open data initiative where everybody can do analysis on payment behaviors, in which sectors, what people are spending all over Spain, up to level of a town. And the next version will even go down to neighborhood. So please visit Kelvin Atlas, it's free. But is it really enough? And as I have 7 minutes left, you may imagine the answer, it's not enough. What we've seen so far is the digital transformation from within, where we improve our banking services, where we try to become more efficient, more user-friendly with our services, and expand our presence in existing value chains. But we also have an outside-in approach, and that is InnoCells, where we have founded a new company to explore new digital business model. This InnoCells connects to academic and startup scene. We look for disruptive and even cannibalizing ideas in the financial sector and beyond. Build strategic options for the group. And of course, we want to make money with that. That is not a fancy R&D playground with 3D printers printing coins like I see in some innovation hubs of banks. This is about business. We want to create new businesses. So have a look what InnoCell is. It has two pillars. One is investments into fintechs together with other units of the bank, seed and early stage up to Series A round funding. But then the other pillar is the InnoCells in residence, where we give new digital ventures a place to fulfill their dreams. And it's more than an incubator, because we give funding, space, resources, and access to bank assets. We are active in Spain, UK, and Mexico with that service. It all starts with an entrepreneur and an idea. Entrepreneurs may come with or without idea, because we have a long backlog of ideas waiting to be implemented. A freelance contract for 6 months for this entrepreneur in InnoCells. We are looking for people from fintech and tech space. We provide the team, the funding, resources, networking, and of course access to the bank, and some capacities which are built within InnoCells as competence centers, like biometrics, IT delivery, UX experts, advanced analytics, blockchain. Plus, as I said, access to the IT resources of the bank, like our security department, for example. The methodology is different from others. We go through discover, define, design phase, where the entrepreneur has to build his team, build the business case, and then in the board of InnoCell, there is a decision whether this will be implemented, and then there are 6 months for deliver. We believe we are unique with that model, because we provide deep industry knowledge, access to experts in the bank, like economic research or experts in trade finance, in securities business, corporate assets like data, services, clients, the financial muscle of a large financial group, the competence centers, and independent company, so no corporate overhead. So it gives you more freedom and focus than a classical innovation hub within a bank, but on the other side, more content than an incubator or accelerator. So what happens when a cell has fulfilled and delivered after 6 months? So one possible result, it's a very good idea, but not standalone, but could be very good for to be integrated in the bank. So we move that InnoCell into the bank as a service. The entrepreneur and the team get a bonus and even the possibility to run that new business within the bank. The other alternative, it's a fantastic idea, but better outside the bank. We create an own company, so we do spin-off with a new business, equity share for the entrepreneur, and perhaps find more capital outside. And of course, there's always the other chance. The idea was not that good, so we look for the next idea. Now let's listen to Francisco, who is one of our entrepreneurs.
And I have founded several companies such as Motor.es, Agente Creativa.es, and Multidap.com, among others. I've seen a great opportunity in InnoCells because I believe they have the network, the muscle, and the money to make something big. I joined InnoCell 3 months ago as an entrepreneur in residence to start a new cell. The first challenge I faced was to discover a new business opportunity in the financial area. During this time, I've applied the company's methodology to create a new cells, and I create a team really focused on it. InnoCells is a perfect ecosystem to start a new business from scratch to the launch into the market in a few months, super quick. I am developing a platform-based new business which also fits Banco Sabadell digital strategy for the next 3 to 5 years. If you have in mind to create a new business or looking for the ideal team, apply at innocell.io and join us. See you here, Fran.
Okay, so that is InnoCells. We will see other presentations on InnoCells. Our head of InnoCells, Julio, is around. If you want to know more about it, please contact us at the B Startup booth. And that brings me to the final slide, B Startup, which is another piece in the puzzle of our innovation and digital strategy. Founded in 2013, B Startup is present in most of relevant events like this one or 4 years from now. We have a batch of 10 companies every year in the B Startups 10 with 100,000 euro seed funding. We connect to Sabadell Venture Capital for further funding in more mature businesses. We have invested in total more than 10 million in companies with a total of 400 employees here in Spain. And B Startup wants to be the bank for startups, not only fintechs, for any startup, because any startup needs a bank as well. We have 50 specialized branches where specialized teams understand the needs and the structure of a balance sheet of a startup, which is very different from a classic business. We already have provided 130 million of lending to startup teams. If you want to know more, please visit our booth just in the entrance of this event. With this, thank you very much and enjoy the event.
Something down to do. Hey, baby.
Thanks, guys. Good job. Loving it. That's a classic. That's a classic now at this point. Amazing to see what Banco Sabadell are doing. Those guys, they're really killing it. It's one of these companies that I love to see. What they're doing is real of substance. Like the programs and the initiatives they're launching are really useful and practical for entrepreneurs, right? It's a lot more than show or just corporate responsibility. They're truly ingrained in the company how they're engaging with the entrepreneurial community to accelerate their innovation. And South Summit wouldn't be South Summit if we weren't going to have a conversation about what's happening in the mecca of innovation, being Silicon Valley, right? We are firm believers that talent comes from everywhere, and the best and the greatest disruptive companies can be built out of anywhere. But of course, it's nice to have a supportive ecosystem with the capital available, the talent available, the expertise available to really help you build your team and build out all the capabilities you need to take your startup to the next level and be a globally impactful business. We have 4 super interesting VC firms joining us for the next conversation. Each of them has a presence or its origin out of Silicon Valley, but interestingly, they're all operating in different international markets as well, across Europe and across the globe. So it's going to be really exciting to kind of see their different perspective on the types of innovation they're seeing in the different ecosystems that they're working with. So without further ado, I'd love to invite to the stage, please, TJ from Horizon Ventures, Tal from Lightspeed Venture Partners, Chris from Phoenix Capital, and Inigo from Cambridge Associates.
Hello, South Summit. Thank you very much for having us. We're excited to talk to you about our panel topic today, insights from Silicon Valley and what's happening next. So I'm TJ. I'm from Horizon Ventures, an early stage venture firm located in San Francisco, and joined today by 2 other VCs and 1 LP who is a large backer of a number of different venture firms. So we'll get a really interesting perspective today from our group of panelists. So maybe I can just open it up to intros, and Tal, maybe you can kick it off.
Sure. Thanks for having us. First of all, I'm representing Lightspeed Venture Partners. We're a Silicon Valley-based fund with offices in Israel, India, and China. Right now, we're investing out of our 11th fund, which is a $1.2 billion fund. I'm one of 3 partners on the ground in Israel, and we have, I believe, 14 or 15 others in the States. And we're actively looking for deals in Europe, more and more so in the past 2 years, I would say. So we're spending a lot of time here attending conferences such as this and on the ground in different cities.
Yeah, pleasure to be here. Hello, my name's Chris. I'm on the investment team at Finox Venture Capital. We are a Silicon Valley-based VC, and we've got about 7 other offices around the world with a total of about $1.5 billion in assets under management. All of our LPs in our network are large corporations across Europe and Asia. So when we invest in US companies or wherever they are, we help bring their products to the Asian markets when they're ready for that. My main focuses are in AI and blockchain.
Hi, good morning. My name is Inigo Garcia. I work for Cambridge Associates, which is a global investment management firm. We invest over $1 billion per year in venture capital that ranges from seed stage to expansion stage in the US, but also globally, as we have 9 offices around the world, and I'm based in the San Francisco office.
Perfect. Well, great. Thank you guys very much for joining us, and excited to kick off. So figured I'd start talking through basically the pace of innovation and just sort of what you've seen. Tal, you've been in the industry now for a number of years, and want to understand, Tal, maybe you can kick it off, how rapidly are companies coming to market, and how rapidly are technologies getting adopted, and over the next 5 to 10 years, do you see that slowing down, picking up?
Yeah, It's a good question, and probably it warrants probably a longer discussion. But I'm trying to think about this question in several discrete buckets. So one bucket is really the pace of core innovation, being new platforms being generated, new technologies being out there, and we've seen, I believe all of us have seen internet and mobile, especially consumer apps, kind of slowing down or maturing, reaching sort of saturation. And in the past 2 years, I would characterize it as lots of capital on the sideline, lots of funds, basically looking for the next platform to build on. Blockchain was one assumption, autonomous vehicles is another assumption, but I don't think really or VR and AR, was the hype, 12 months ago, and we'll see where that goes. But really, I don't think anyone can point to the next big platform and say, this is the next big thing, the same way mobile was or PC or internet in prior waves. Having said that, just the cost of launching a new business keeps dropping. The ability to manage businesses around the world from, without offices or, shared spaces or whatever, that keeps happening. So this in itself kind of, makes more and more companies sprout out. And as you said, I mean, there's lots of money out there, which is, again, an incentive for many people to kind of leave their desk jobs and start new businesses. I'm not sure if you would call that necessarily innovation, but definitely tons of new companies being generated, lots of new attempts at different things. I think we're in an in-between period. That's how I would characterize it. Like, people are kind of like sitting and waiting for the next big thing.
Interesting. So yeah, what's the next big platform shift, basically?
I'm personally, I've invested in the past in crypto, and I believe that we're waiting for the killer app. I don't think that this is just like my 2 cents. Like, I don't think we'll see it necessarily as a new type of currency or store of value necessarily. I'm looking at it more like a TCP/IP kind of innovation. So we're looking for the internet browser to come up, and we've seen several attempts, especially in enterprise use cases, cloud, using blockchain, using the fundamental innovation to kind of drive new products out there, and that's where I'm focusing my attention on. But he's the expert. So,
Perfect. Well, we'll come back to that in a second. Maybe Chris, you can give us kind of your thoughts in terms of pace of innovation. Are things speeding up or slowing down? And then for you personally, where are you spending your time?
Yeah, I think you got to separate into buckets. There's certain sectors that are definitely slowing down. Some like spaces like IoT are having trouble gaining traction, but at the same time, a lot of corporations are starting to find out use cases for bringing IoT on board. The two biggest platform shifts I've seen since kind of, mobile, internet, and cloud, I would say, are one, AI being applied to traditional SaaS-based companies. So intelligent software. I think really intelligent software will be the next big thing. With the new research breakthroughs that have happened over the last decade, really in the last 5 years or so with regards to deep learning and neural networks, we've seen kind of a new shift where there's this massive amounts of data from largely unchanged industries or industries that typically have lacked innovation, oil and gas, containerized freight, a lot of logistics-based companies. And with these massive amounts of data that are now being available online, access for data scientists to use, applying these neural networks and deep learning models to them, you can bring a ton of new value to these industries that really haven't been changed too much over the last few decades. So I'd say that's kind of the first platform shift I've noticed. And then the second, as he touched on, has been kind of the whole crypto hype behind the blockchain space. And really, the hype is warranted to a certain extent, but I think the most effective and promising companies we need right now, similar to how we kind of referenced kind of more the website being based analogy, is we need infrastructure in place that are being really developed at the protocol level of the blockchain, because really you can't build all these applications on top of infrastructure that's not there. So I think with regards to the blockchain platform shift, right now we're at a time over the next few years where infrastructure and protocol plays will be the first kind of new wave of setting the base for then applications and developers of all these different chains coming out there and different blockchain startups being launched to actually build on top of these protocols and improve the entire system, come up with all kinds of use cases. But yeah, I would say really at the protocol layer, that's kind of the fundamental change I've seen.
Okay.
And if I could add, I mean, one of the reasons why we have been investing in venture capital and technology for so long, and that we are seeing a trend on, is not just the unicorns of the world, but what Chris was mentioning about new corporates that are non-technology adopting new technologies. This is the first year, probably ever, that we are seeing non-tech Fortune 500 companies investing more money in venture-backed companies than actually tech corporates invest in those companies. So the rules of the game are changing a little bit, and you don't only have like Goldman Sachs in financial services, but you have Walmart doing over $1 billion acquisition in Jet. You have PetSmart acquiring an e-commerce platform. So you have a lot of that adoption that is really starting to happen right now, because all these tech corporates want to also be viewed upon as like technology companies, not just an oil and gas service company or a retail company.
Yeah, I think that makes a lot of sense. Tech is, I think we've heard that now from two of you, is that, and Chris, in your point, AI is starting to impact other non-traditional sectors. And in your point, it's just non-traditional technology companies are starting to adopt and invest more into technology space. Basically just seeing a permeation of technology happening throughout the global economy, which maybe that does accelerate things a little bit. And Inigo, maybe if I could just ask, sort of outside of tech being adopted by sort of the non-traditional players, at least in the space, what else are you perceiving in the markets as an LP? Are there, how are folks approaching this? Are there more funds being started now? Are they more specialized? Are traditional folks actually trying to invest through the more generalist funds? How are you perceiving these markets as an LP?
Yeah. So 2 years ago, we actually wrote a paper that we titled Tech or Venture Capital Disrupting Itself. Where you have incumbents venture capital firms in Silicon Valley that are very important and have generated very strong returns over the years, but you also have a new wave of venture capital firms that are raising smaller funds, maybe investing more at the seed stage, that are a little bit more maybe sector focused, whether that is artificial intelligence or blockchain or other areas. And we have seen that the number of venture capital funds raised in the last year has increased dramatically. So it's an interesting dynamic, and from our perspective, being investors, we recognize that it's important to balance a portfolio of venture capital between established managers and also emerging managers, because the representation of those emerging managers in the top quartile of venture capital firms is very significant. So you are missing out big time if you are not there. That also applies to these venture capital firms, by the way. A lot of them are being set up in Silicon Valley, but also we're starting to see a new wave of venture capital firms set up outside of Silicon Valley, because as Tal mentioned, today you can start a company basically anywhere else in the world.
And I think you were mentioning something to me before the panel about how returns have looked over time from a geographic focus. What has happened over the last, call it 10 to 15 years in terms of concentration of returns from a geographic perspective?
So through our database, which tracks and monitors over like 2,000 venture funds, basically dating back to 1985, what we see is that before the tech bubble in 2000, basically you needed to be in Silicon Valley to generate venture capital returns. Otherwise, there was very little innovation happening elsewhere. What we're seeing since 2000 is, again, the rules of the game changing a little bit, in that Silicon Valley continues to dominate in the returns generated in venture capital, but you're also seeing venture capital returns being delivered elsewhere in the United States, but also in Europe and Asia in the last 10 years very meaningfully. So when you look at the top 100 companies in every given vintage year, you see that that 20 to 35% of all value creation in those top 100 companies are actually companies based outside of Silicon Valley.
Interesting. And Tal, maybe we can take that back to you. I think you mentioned you'd personally been spending a bit of time in cryptocurrency, focusing more on the protocol rather than store of value. Cryptocurrency and particularly protocols really create a decentralized system and allow for broader adoption. Maybe you can talk a little bit about what you're seeing in terms of the evolution of cryptocurrency and sort of where you think we're at today, how you think that'll sort of evolve over the next 5 years, and where value is actually going to be created within that ecosystem.
Well, there are way bigger experts than me on this topic, and asking about crypto, looking 5 years into the future I think is close to impossible.
Yeah.
I mean, if you look, we just had a discussion, I think, in Amsterdam, just met one of the founders of Bancor, who did like the largest ICO in history, and she said they sold like $150 million worth of crowdfunding tokens in, I think it was 4 minutes. Right.
Wow.
So and that was like five months ago. So this is and obviously that seeded like a huge movement. So we're now seeing startups treating ICOs and tokens in general as a legitimate fundraising strategy, which again goes to the point of venture funding reinventing itself and so forth.
Yeah.
And we'll see if that gets any traction. But it's definitely I'm in the trenches talking to founders. It's on their mind, and they're definitely thinking about this as a valid course of action when starting a seed stage company. And if you think about it, in an abstract level, this allows for anyone, anywhere in the world to partake in this game that's called venture capital. And I think that's maybe the fundamental shift, because 15, 20 years ago, you had to be physically in Mountain View and ride your bike to where they put like servers in racks and whatever to be part of that game. And now you can just do it in 4 clicks from anywhere in the world. And I think that has tremendous implications. And in a way, the genie is out of the bottle. So whatever happens next will be, patching and kind of tweaking and maybe like adopting the system to work and kind of comply with, regulation and whatnot. But I don't think you can kind of turn back the wheel and say, no, we still want to keep it, under the kimono in a way.
Yeah. And curious, so along the lines of crypto, I've heard now of a number of established firms and funds putting capital into not only the currency out of the fund, but also investing into ICOs. Have you guys done that at Lightspeed, either of those?
We haven't. We've had a discussion about it to come up with a strategy. We ended up deciding that we're definitely we're actively seeking for ICOs that make sense. And for us, makes sense. I think most of the ICO, again, this is broad generalization, but if you look at the ICO landscape, a bunch of companies there are teams that could have never, raised venture capital fund just because the quality of the team or whether it's just like subpar.
Yeah.
And there's a bunch of companies where the token just doesn't make any sense because, from an economic perspective, there's nothing to drive the token value upward. But if we'll find something that where the team is amazing, where the product makes sense, and kind of evaluate it, just as we do with any other company, and it makes sense, we will not invest if that makes any sense.
Got it. And Chris, maybe you can talk to that a little bit at Phoenox, and have you guys looked at investing in out of the fund directly into currency? Have you looked at investing into ICOs before? How do you guys think about that as well?
Yeah, so we've actually been in the process. We just started a few months ago of actually raising a small ICO fund that'll be focused on kind of Southeast Asia and Japanese blockchain startups. I can talk about a little bit how we kind of are evaluating and critiquing that, but really we're looking for the projects that maybe need between 500K to 5 million maximum in venture funding to build out their MVP or just kind of their base product. And then from there, it might make sense to do some capped, maybe $15 to $25 million ICO rounds when they hit specific milestones as traditional kind of venture funding works for the timeline. But we're not looking for projects to invest in that really just are, red flags right away. They have too high of raising way too much capital. There's no cap. The development team has no strong background or correlation. The utility of the token, as he mentioned, is completely disincentivized with what the product or platform is. There's so many solutions coming out that are just the decentralized version of an already existing centralized solution. and that's really not bringing enough value to make sense to invest in from an ROI perspective. I mean, community building skills of these projects is massive. You really need to be able to have a team that can build up a community around them for a number of things. You want feedback to improve your system, product, or platform. You want to make sure that you have a community there to market your product so that word gets out about it. And it also builds kind of a support around the team and gives them confidence. And proper incentivization amongst the team members is very key in terms of building out their product. When these projects, crypto projects, go and raise a $100 million ICO and they don't even have a product built yet, the founding team is very disincentivized to actually execute on it because they already have millions of dollars they could cash out on their pocket right there. We've seen a lot of that, and we are raising a small ICO fund as kind of a test project here at the end of the year. But it's really interesting to see how the whole blockchain movement is changing the entire venture space. You're seeing all these companies now coming up with solutions where they can tokenize the equity that LPs have in funds, so that LPs maybe are investors in Lightspeed, but they want to sell out their equity to another corporation or potential institutional investor that wants to become an LP of the fund. And you kind of have a new market being built where equity shares can be traded through the tokenization method of these traditional venture funds.
And Igo, I'm curious, how often is that coming up at Cambridge Associates, specifically trading equity from one venture fund to another, and is that something that you guys are tasked with dealing with at Cambridge?
Yeah, so our primary job and how we've been helping our clients invest has historically been directly in funds.
Yeah.
And then co-investments and secondaries is something that we looked up opportunistically. Now, a couple of things has been happening, I think, from my perspective in venture capital. One is that you have new entrants like mutual funds, hedge funds, corporates at the very large end of financing expansion rounds that are substituting IPOs. So if you think of like the valuation that Amazon or Google went public.
The private IPO, basically.
Exactly.
Yeah.
So today you have Fidelity or you name it, doing these late stage financing rounds at like very high valuations. So what is the impact for the small seed investor that backed that company maybe like 5 or 6 years ago? And also what's the impact into our clients, our investors that backed that fund because we like to see it at an early stage? So it's definitely something that we're seeing and something that we are considering in how to execute. It's not going to go away or disappear anytime soon.
Okay. So, I mean, we've kind of talked about some of the large trends that we're seeing, but figured I wrote a few down and wanted just to see, what you think would have probably the largest impact over the next 5 years, and then also the least impact over the next 5 years. So the ones I have written down here: future of transportation, and so you can put things like ride sharing, you can put things like autonomous vehicles, you could put things like bike sharing into that category. Second one, future of work and future of living. Think about millennials who are renting, not owning. They want to be more mobile. WeWork is maybe a really good example of sort of the future of how offices may be shaped. AI is a third trend. Mobile, a fourth trend. Bitcoin and blockchain, a fifth. And then lastly, VR and AR. So Tal, maybe we could start with you. What'll have the most impact in the next 5 years, and what'll have the least impact over the next 5 years?
If this was like a virtual, like a fantasy league game, I would go all in on mobility.
Yeah.
And in a way, I think this kind of drives the innovation. I think about it a little bit like the race to space and the Cold War in a sense, because a lot of the innovation that you see in the other categories that you've mentioned, blockchain aside, but if you look at what happened in AI and GPU technology, what will happen to share living, even if autonomous vehicles are here, or when, or if these marketplaces kind of become mainstream, and I just think that it's going to fundamentally change how we live our lives in the next. And then the bet is, again, is it like a 20 years out bet? Is it like a 30 years out, maybe 5 years out? And that's like when we look at such deals and evaluate such deals, the discussion is not about the what, it's more about the when.
Yep.
Because if it's 15 years out, maybe you don't want to invest too early. But I think that will be like the wave that will definitely, in 30 years' time, we will discuss this the way we're discussing internet today, I think.
Yeah. Okay. Chris?
Yeah, I mean, with regards to transportation, that's drastically going to change for the next decade. As long as Elon Musk keeps coming up with a new project every day. I mean, he's now trying to do rocket ships from one side of the planet to the other in 30 minutes as transportation service. So I'll leave those up to Elon. We're very confident. We're starting to see AR/VR being applied to enterprise successfully for the first time. There's really kind of a dry patch over the last 5 years, and finally the tech's just getting good enough that you could argue maybe in the next few years you'll start seeing in the enterprise space, instead of having actual desktops, you'll put on a headset as your work computer in your virtual environment, and you'll basically just be interacting inside the headset while you're working. And we invest in a company called Meta. They're focusing on that heavily. We've seen some plays with more regards to the functionality of AR/VR headsets, and there's a lot of software plays out there that need to really succeed for these headsets to ever become a thing. And we've already started in the last, I'd say, 6 to 12 months, really start to see some successes out of there with regards to hand gestures inside, with regards to the vision component, like things coming out like light vision. There's some new emerging techs, and we're starting to see corporations that are actually interested in working with these companies now to build out new unique products to completely revolutionize how we work in our everyday office environments, or potentially even from home, just putting on a headset from home. So AR/VR is pretty cool. And then lastly, since I've already kind of talked about blockchain a little bit, we've seen a lot of stuff going on in AI, really with regards to the kind of subconscious or non-direct applications, just basically applying neural networks for image recognition purposes. We've started seeing voice really gain adoption. The natural language processing barriers started to become overcome. And really, we've invested in a few emotion recognition plays that we've seen massive applications for the gaming industry, for the media and advertising sectors. We've had like interrogation programs approach some of these emotion recognition plays, governments of large countries asking if they can use this emotion recognition technology to use it for interrogation purposes on terrorists or whatever it may be. So there's really cool applications being made. Call centers are starting to apply emotion recognition technology to be able to understand while they're talking to clients the emotion level, and it's helping them to increase their conversion rates on these calls or these sales pitches. So yeah, there's some really cool stuff going on with AI too.
And I mean, being an investment manager myself, I'll let these guys do the big thinking. But I mean, one of the things that everybody has been talking about data for the last couple of years. But if you think about how this data is gathered and how the meaningful implications that it has for making decisions, as applied today with artificial intelligence and machine learning, I think it continues to be a very critical part of venture capital. Today we see B2B being a huge sector that is only growing. I mean, I cover also the mature software space, and IT today represents the largest sectors for private equity buyouts. So when you think about the implications that data artificial intelligence has in corporations and companies making better decisions, I think that's very meaningful as it applies today, and I can't agree more with what Chris and Tal were saying about looking forward some of the implications of mobility and obviously blockchain and other areas.
There's one more domain that is actually not on your list,
yes,
but I think is at least equally as important, if not more, which is genomics. And I think we're seeing the convergence of CRISPR technology and the sequencing and the cost of genome mapping dropping and so forth. So I'm not entirely sure. I know that there are a lot of VC funds shy away from it because it used to be very capital intensive and very risky business to be in. But I think this may be the next decade may be the decade for biology and chemistry and not necessarily computer science. And we're seeing more and more teams being formed around biohacking and applications around genomics. So that's one domain that we're very excited about.
Great. Yeah.
Actually, Tal, I'm very glad you mentioned that app because often our clients are sometimes concerned about healthcare and life sciences investing in venture capital. And we ran an analysis recently where we actually showed that the median venture capital firm in healthcare and life sciences has done better than the technology.
Less competitive deals, you can get them for a better price, and if you have real domain understanding, you have an edge, right?
Great. Well, I think we got a lot of bullish answers in terms of what spaces are next, but we missed what's going to have the least impact in the next the next 5 years. So maybe in the last minute or so, we can really quickly go. And maybe, Inigo, we start with you, and then we work backwards.
Least impact. Well, I think as it applies to technologies, I mean, I think like the mobile platforms are already there. You already have like Chrome and Apple basically like just running the world these days, and these corporates are very well funded. They have a lot of cash. I think it's hard for venture capital to compete with corporates that have so much cash in their balance sheets in creating core platforms. So like Salesforce.com, I think you are going to see a lot of things building on top of the platform. How do you maybe like compete against a Salesforce.com or a Google? It can be hard to see.
Chris, what's going to have the least impact in the next 5 years of the big trends we talked through?
Yeah, I largely agree with mobile as a good answer. IoT as well. I think IoT will eventually become integrated into every aspect of our life, no doubt. But timing-wise, I think it's still we're still finding really hard use cases for these IoT startups to actually gain enough revenue or traction from any of their partnerships to really become very successful companies, have high exits, and really get enough institutional investors attracted to investing in them. So really, there's still not quite enough funding going into IoT, and I think it's actually maybe it's hit a peak this year, but I don't think it's going to continue rising. I think we've started to see it hit kind of the stagnant level, and I guess I'm a little bearish on IoT over the next few years, as from both a returns perspective and from a kind of a use case perspective initially.
All right, last one, Tal.
Yeah, I wouldn't say like necessarily least. It's like not necessarily bearish, but I think SaaS is very well understood now to the point where it's almost a commodity, where you can find like 5 companies attacking the exact same sector and really compare them on like 5 KPIs, and it's not as much as a breakthrough as it used to be 5 years ago. So my bet is that we'll see less and less of that and that kind of that business model kind of reaching saturation and kind of taking over the entire software world, and VC money will kind of shift elsewhere.
All right. Great. Well, thank you guys for joining us and telling us what you think is next. And thank you, South Summit audience, for listening.
Thank you.
Thanks, guys.
Cheers, thanks. Wow, thanks guys. Latest trends from some of the top VC firms out of Silicon Valley. It's really exciting to see what's going on there, especially in areas of IoT, artificial intelligence, new mobile platforms, areas of how we're engaging with technology, which is kind of a theme that has been recurring this morning. So super interesting to hear about it from the guys working out of the cutting edge, straight out of Silicon Valley, and investing across the world as well. This next segment is one that is particularly close to my own heart, and I know it's close to our founder, South Summit's founder, Maria Benjumea's heart as well. Every year, we are making greater efforts to have more visibility, more participation, more progress, more fundraising, more companies launched by every member of our society, regardless of race, regardless of sex, regardless of political ambitions. We really believe that entrepreneurship is the great uniter, and is a great example of leadership, and can really see how people can empower themselves and build the companies, the jobs, the careers, and the lives that they want to build. And we believe that entrepreneurship is a liberating factor that lets people to do that. So we want to see everyone from every walks of society do that even more. It is with great pleasure that I introduce the next panel. We have 5 titans from the tech industry here today who are going to talk about a super interesting and unfortunately very necessary issue here about diversity in tech and how can we do better. Please join me in welcoming to the stage, please, Jackie Hernandez, one of the founding members of Plug and Play Tech Center, and Christine Rope from Ethan Partners, Executive Search for the tech industry, Monica Pal, the CEO of 4IQ, a threat intelligence company in Silicon Valley with roots out of Madrid, Megumi Ikeda, Managing Director for Hearst Ventures, and Elena Herrero, the President of HP in Spain. Thanks, guys.
Congratulations to South Summit. It's really inspiring when you get in here. There's such an energy and such a good spirit. I mean, you know, you come from always corporations, you come from HP, and you come here, and honestly, it's something, it's great. I mean, this is what gives the future. Now, it's technology. It's technology. It always happens, no problem. I'm something doing wrong. So where do I talk? Here or here? Here? Better? Yeah. So fantastic. Let's go to, short of time, as always, as I know. Let's talk about the topic of this next half an hour. Is going to be diversity in tech and how do we do better. Let's try to put it a little bit in context, and I'll try to present the panel first. But I mean, when we talk about diversity, we're just talking about diversity is a very big word, and diversity means a lot of things, and fosters, of course. I think there is an issue in technology, as always, and it means it fosters innovation, creativity. So probably when we talk about entrepreneur, when we talk about innovation, if you don't talk about diversity that fosters creativity, I think we're missing a lot of things. And for that, I have the pleasure, to introduce this and moderate this panel of. Let's put it this way, a very diverse in all aspects, in terms of backgrounds and in terms of what it means to innovation. So I'll start by Jackie Hernandez, is Senior VP of Operations and founder of Plug and Play Tech Center. Is the largest global accelerator and one of the most active investors in Silicon Valley. In fact, invested in a lot of companies, more than 700 high-tech startups like PayPal, Lending Club, or Dropbox, for example. I know she has a major in chemistry, like I have, so I didn't realize we can work in technology being a chemist.
Despite chemistry.
Despite. Well, perhaps very well needed because you have a secret formula, no? And of course, she's also very, sharing experience in different areas about education, about entrepreneurs, about how women can really make and help in the entrepreneur world. Then we have Christine Roop. Yeah. She's the founder and CEO of Ethan Partners, okay? And really looking and searching for what I think is the most important topic is talent. Talent in terms of helping startups, helping companies. I know that you've helped Uber, Naspers, a lot of them. And also, I know you hold a master in marketing and business communication for Copenhagen. And before that, you were working also at Rocket Internet, no? That's it. Again, I think it's the other side of the two T's. I believe the world is transformation, two T's, technology and talent. I think that is key topics, key formula, as we were talking. Monica Powell, she is CEO of 4iQ. She's the Chief Executive Officer. It's a company that looks for security issues. What a big topic today. What a big topic today. Security. I mean, issues in the deep, dark web. I love that. I mean, it gives you some mysterious. And you're also a member of the board, no? I know you have a big experience, more than 30 years in technology and leadership roles. And I think, I mean, your point of view, that entrepreneur, I think is going to give us a lot of lightning. You also hold an MBA and studies in computer science and in different universities in the US. Megumi Ikeda is Managing Director for Hearst Ventures. She's the Managing Director, but you're also the General Manager for Hearst Ventures in Europe, which honestly, it's nearby, let's put it this way. So you oversee a lot of investments and from inorganic and organic acquisitions. And I know you worked, interesting, resonate to me, about worked also of merger and acquisitions for NBC Universal. So it's all the content world that I think is so important, and also worked with Wired, this famous Silicon, and you also hold a degree in Columbia University and MBA at UCLA. I mean, let's start. I mean, I think let's talk about the topic of diversity. We're just talking about that topic before. What's your view? What can diversity in the world, both entrepreneurship and innovation, bring day to day? Whoever wants to start, give it a try. And what is the main barriers you find today why diversity still has a lot to do?
Well, let me give it a try, and thank you very much for having me. It's a pleasure to share the stage with so brilliant ladies here. Thank you. I guess that the one of the part that I think we have to just start with the premise that diversity refers to everything. It has to be gender, it has to be creed, it has to be preferences, etc. So sadly, of course, in the month of August, we had kind of like the Damore affair and the Google memo that brought a lot of the attention to gender. And so, but we, if it wasn't for Susan Wojcicki, for example, from YouTube, that she said, if instead of saying the manifesto about the women physiological or biological differences, it would have placed a different word like African American, or it would have placed an LGBTQ, it would have replaced the word woman by any of those, it would have been a huge issue, and the angle would have been completely different. It would have been brought to court. And so we have to just focus that it is not only about women. It's not only about the gender equality, it's more about understanding that it is the inclusivity and the understanding of individuals and recognizing the strengths of individuals as well.
I think diversity has a negative spin right now in the press, right, because of these stories, but actually you need a diversity of ideas, and you need a diversity of opinions, and a diverse debate, and an honest one, as opposed to a politically correct one, in order for interesting companies to be built, and in order for ideas to be stronger. Groupthink creates a very brittle company, and a very non-resistant business.
Yeah, I think I definitely want to make sure we expand the word diversity to include, all differences. And to be honest, I think it's really about human beings and uniqueness. Each one of us is unique. It just so happens that if we share common backgrounds, common languages, common culture, then we tend to have common ways of thinking. We tend to have the same box that we operate out of. I think the opportunity is by welcoming diversity, welcoming different approaches of viewing the world, that really is where innovation comes from.
Yeah, and I definitely agree. One thing to add, what is quite interesting, is in terms of when people are hiring, so when a founder is putting together their team or someone's hired in as a CEO, we often see when they start off with who they want to hire, they always encourage diversity and they're open to lots of different profiles with different backgrounds, different nationalities. But what we do see is a tendency for people to hire candidates that are very similar to themselves. They'll hire someone who has the same ideas, very similar background, and I think that's also why a lot of the teams, they become very, very similar, and not as diverse as I'm sure a lot of people would like to have or start out with intending to have. But yeah, they often look very similar when you look at the management teams. So that's definitely one thing, embracing the differences and also realizing the value that can be added through diversity.
Yeah, and one thing that you realize, I don't know if you agree, that I mean, this is not only a nice thing to have, it's a business issue. I mean, you know, it affects everywhere. We are in a global world, so when you design products and services, you better be a diverse way of thinking and designing operations and operating, thinking globally, acting locally, but with a diverse background, because if not, it's going to be very difficult. Nevertheless, getting a little bit also into the gender type of a topic too, I think one of the things, if you go into technology, that I think is the new language. I always say that technology is something that it's absolutely affects everyone, everywhere, no matter where you work, in which area, subject, segment you work. Technology is there and it's transforming the whole world. I mean, this is the big exponential world that we are living. What studies come to say is that if women, and I'm putting it into women, and of course diversity is much more, I agree, but let's put it to give it a try, that if women would go into tech jobs, which honestly are the jobs that we are all companies are looking for tech skills. This is the new skills that are not only technical skills, but also the creativity, design thinking, etc. What are we missing that women are not there yet? What are the barriers that we are finding, especially in the tech world? I mean, today, just to give you some data, 80%, let's put it this way, 80% of the ICT jobs are done by men. Yeah. Only 19% of all people working in ICT are led by a woman. I mean, that means we have something to do. What do we have to do? What are the barriers? What do you think about that, statement? I'll start with you, Ansa.
Yeah.
Just to give it a try.
Yeah, so I actually think that it starts during education. That a lot of the more tech-related subjects, they're more targeted towards males. And females are often pushed more towards either more creative subjects or often things like marketing, HR, and just different or service industries. So I think it would start there. Also in terms of changing for the future, I think it has to start very early on. And then I also think another then when you get later on, when people start working and start their careers, I think a lot of the tech companies, it's a very, very male-dominated environment. And I think it's great for females who are comfortable in that environment, but I've also seen that a female out of university will join a tech company and then maybe get a bit scared off and then change. So that's another.
Don't you think, I don't know if you want to add something, don't you think there is a huge opportunity? There's where the profiles are coming. That's what we are missing. More than 2 million. We are saying that, at least, for example, in a country like Spain, for 2020, we're missing tech profiles. Don't you think there is a big opportunity we can't miss?
What do you think? Personally, I think it comes at the individual level, because what we're trying to do in general is we're trying, and as a global tech companies, trying just to minimize lawsuits by complying with the diversity standards that everybody kind of like feels obliged to fit. But the reality is that individual level, we're not doing our share. And I tell you that I'm a woman, I'm a single mother, Hispanic that works in California and Silicon Valley in tech. Okay.
There's two of you, right?
Yeah. I remember one of my professors used to say, I told him I am in kind of like the 5%, and said, no, you are in the kind of the ridiculous percent. And it was very funny because that's what was happening. And so, but the reality is perhaps even us, mothers and educators, because we're the first educators, we're not pushing individually from home. That standard of pushing our daughters and sons to understand that you have the same capabilities for doing whatever you aim to do, and you just have to work hard. But we just have to push and encourage to get into the programs. I mean, it's very obvious. I mean, a lot of moms, they say, well, let's put it into piano, let's put it into ballet, let's put it into this and that, and we forget is why don't we put it into coding school?
I agree with all of that. My one frustration when we talk about education and early in the pipeline in these conversations is I think it passes the buck. Because there's things you can do now. And so that's true, but like you can't say, oh, yep, that's what we got to do, and then not worry about it for the next 10 years. Mm-hmm. I think there's been some very good articles that came out. John Battelle wrote a great piece after the Google piece, which was saying, you know, this whole culture around idolizing the young man who has not gone to college, but it was deeply technical and skilled. There's a problem with that. There is value in going to college. There is value in working at a big company. There is value in being exposed to the social mores that those environments teach you. And to create a culture where some of these stories that have happened, you need to, there's a cultural element and there's a level of rigor and discipline that all of these companies should have, you know, whether it's private, public, VC, startup, or public company.
Absolutely. I think also sometimes it's a language problem. We don't realize the way we all use the language in a way, stereotyping things, and, you know, making feel sometimes, you know, even the other day I had an experience, somebody was saying that they were going to play rugby, and the mother was saying, but are you going to play rugby, to her daughter, and say, that's a man thing. Well, for goodness sake, don't stereotype. I think sometimes we stereotype a lot. We have a lot to do from education there. Going to the entrepreneur side of the thing. I know there are much less, let's put it this way, I don't want to even give percentages. I know it changes by country and region in the world, but I mean, we could say 20% of startups are run by or started by women, especially in the tech area, and perhaps that's even high for some countries, let's put it this way. But what is also studies say, those ones that are run by women long and grow faster. 63%, there is a Harvard study there. Don't take percentages, but what's your thought about that one?
Sure. I just want to go back to your previous question, though. Okay. And what you were saying was that, you know, there's a huge shortage, right? And I just wanted to comment that the filtering out or the barriers start right from the beginning, and they go step by step all along the way. So it's not just, you know, the young kids, what they're encouraged to participate in the teen years. All of a sudden, you know, being the geek, being the math whiz is not cool. You know, all of a sudden you go into robotics, at least in the US, and there's no other girls there, so I want to be with my friends, so I don't do robotics. So every step of the way, there are barriers. And so I think one of the things we need to think about when we talk about solutions, we have attempted as a society to address pieces of it along the way. But for success, you really need to look at it holistically, and we need a holistic approach to to removing barriers and creating the encouragement every step of the way. So then going back to your question about entrepreneurship, sorry, can you repeat the...
No, yeah, my point here is talk about innovation, but let's talk about entrepreneurs, because I think that's one of the things that we find, and it's a very important topic for growth in a lot of regions. There are a lot of women that they create startups, they grow it, but it's clearly a percentage much lower than men. My point here is, first, especially in the tech world, but I mean, what do we have to do? How do we incentivize? What are the main barriers women have to, create a startup in tech, but in general? But there is also studies, and I don't know, I would like to know your opinion, is women startups that are grow faster and longer of men. 63% is the Harvard study says that those ones that are led by women have that. What is your view? Is it the pragmatic approach that we have, the avoiding of risks of creating startups? What's your view about that?
No, so I think first of all, to be a woman entrepreneur, I will admit it is tough. You almost have to be, even better, even more determined, etc. Have an even better idea to be even heard. Okay, so I think that the deck it's hard. Having said that, maybe I'm not surprised of your statistic, because if you've crossed those barriers and you have now created your company, then clearly, you're in a different league, if you will. So, but what I would like to see is more people have those opportunities. Not just the fact that once you have the people who break through and create those opportunities or get those opportunities, then are obviously more successful.
Megumi, which are the main barriers, or what is when you see those projects that come along, which is the main difference you see among women and men when they bring those projects to you? Or do you see any difference? Or didn't you realize about it?
I over-index in having meetings with female entrepreneurs because I want to, but it's an active, I have to do that actively.
You have to do.
So there's a base issue of how many people are out there reaching out to us. And then, there's been lots of studies about the ability for a woman to get funding versus a man and the type of questions you're asked. There's all these things that obviously show biases in that whole process that you've obviously been through. That's been talked about a lot.
Let me tell you something. At Plug and Play, we receive hundreds of startups a year, hundreds. We get to the thousands. And we get, unfortunately, when you speak of that percentage that you say, is you have to put things in perspective, because these are relative numbers as opposed to absolute numbers. And so even if it is 63% out of the only 10% that really go up for entrepreneurship as women, then the percentage comes back very low. What I have seen when every time that I hear the pitch of entrepreneurs, and it is a very interesting difference, and that might support your theory why they last a little bit longer. When men go and introduce themselves, they get with their credentials. I'm so and so, I have led 4 companies, I've done this, I've done that, and then they say the solution that they are posing to the problem, X problem. And women tend to be a little bit more conservative and modest, and so when they come with the solution first. They said, this is what we're doing, this is very well poised, very well presented, the solution is very well studied, research and a clear value. But then it takes me 15 to 20 minutes, perhaps to you, to get into the conversation where you have to dig. Give me a little bit of your background. And then 15, 20 minutes into the conversation, which for Silicon Valley is way too much, you learn that it is a PhD in applied mathematics that has run for companies, that is an expert in cybersecurity, that it is da-da-da-da-da-da-da-da. And so what I find in that difference is that men go fight, hunt, and kill, And they figure out if they are bleeding in the process and if they are going to survive while they are bleeding. Women is exactly the opposite. They first check they are bleeding, they wrap up the leg so that they don't bleed, and then they keep on going so that they prevent that they are going to lose their lives in the process. And that is a substantial difference. Because when you come to think of it, it's like, of course, they are very provident that they start cutting on resources, they start cutting on a number of things so that they start wrapping up all the threads such a way that your runway gets extended, and then you get to the milestones that you were supposed to meet with investors. So I don't know what's the best, but that's what I have seen.
I think for the better world, I think probably the world needs a new style of leadership, and there's where we have an opportunity. Yeah? The world of collaboration, it's also very important, I think more and more, probably that's a new style there. As I know we have 5 minutes left, and I'm seeing the watch there, that is only killing me, I'm seeing it there. I would like to have, which is the advice would you give each of you from your experience? I would say to create a diverse culture, and we come back, how important is diversity to creativity, innovation, and differentiation in the world of today, but also specifically for women. What are we missing? What would you, today with your experience in the different areas, what would you give them as an advice?
Can I start?
Absolutely.
I'm going to start here. And I say this because, clearly I've lived the journey, and I have 2 daughters. I actually feel that going to a single-sex school, just an all-girls school, was instrumental in me having opportunities for leadership and to build confidence. And then more recently, I saw my daughters. In Silicon Valley, there aren't many single-sex schools, but we actually found a single-sex school that took a child who was an introvert, a wallflower, into somebody who in college was leading construction, 100 engineers on a construction project. Awesome. So I saw this in action. I would say that if I were to bring one thing for us to think about is not only opening the doors and allowing hiring women, candidates that are proficient. But what's missing, I feel, is critical mass. To shift culture, to shift conversation, it's not enough to have one person of a certain type. You need, and even 2 maybe not good enough, you need just a little bit more so that when you as a different person, the only of a type in a room, when you say something or you see something that is different or you see an idea that is out of the box, you don't feel, you don't ask 10 times like, am I seeing something wrong here? Is it me?
You
right?
Don't question yourself, right?
So I think my recommendation is think about critical mass.
Now let's, short please, because I'm having them pressure.
Mentoring.
Mentoring.
Search for mentoring. I mean, everybody needs a mentor. Just go search for mentors and cross-task in multidisciplinary groups.
I see women hesitate when there are big life changes, right? Be it marriage, birth of children, elderly parents. You'll figure it out. It's not fun, but you'll figure it out. And you are who you are. No people change. You remain who you are with the same ambitions.
Okay.
Yeah, and I would also say, it is a lot about confidence and believing that it can be done, and that's where I also think there's a lack of role models and mentors. And then we can also see there's a cultural difference. So I come from Denmark, where, I don't know, for me it's the same if you're male or female, we have the same opportunities, but there are lots of countries where female don't have the same opportunities. So I think it's also a cultural shift that has to happen.
So with that, I know that we could stay hours talking about this one. I just want to thank you all. I think it's the moment, if I want to end with someone, and this is my personal one, I think it's lovely to talk about it. Let's do something. Let's act. So each of us can do something for us or for the future generations. So thank you very much for sharing your opinions today.
Thank you so much. Excellent. Thank you so much, folks. some really interesting insights there into a hot topic and a very important issue that really has to be exactly put into action and not just discussed, and it's exactly what we're trying to do here at South Summit. Every year we have actually upped the percentage of female speakers on this stage, every single year, so it's still not perfect, it's still not majority, why would it not be? But we're getting there slowly but surely, and it's wonderful to see even, of course, Maria, our strong and female founder, leading the vision around South Summit is excellent also. Folks, we're just doing a little stage change here, getting prepared for our next segment. Another incredible opportunity. I'm just blown away with the program that has been put together this year. We have an absolute business leader visionary coming on stage next to talk about how they are transforming from the inside in. One of the most established companies and one of the most established industries in Spain and operating right across Latin America and other parts of the globe. And they've been doing this for a very long time. This is not new to this company who's coming out now, and they're going to talk about how they've grown the seeds of innovation within the organization and how they're actually partnering with the ecosystem outside of the organization as well. And we're thrilled that this conversation is going to be facilitated by a lovely visitor to Madrid who's coming in from London. I believe she actually has a history in Madrid. She speaks a nice bit of Spanish as well and lived here for many years. Our moderator today is going to be Vanessa Colomard, who is partner and co-founder of Invo Capital, which is a super interesting venture capital firm based out of London and investing across Europe with specializations in deep technology, in the real complex, complicated technological solutions and applying them to some of the world's biggest problems. The team originally came from a hugely celebrated exit from a company that Michael Lynch founded called Autonomy, and you can actually see Michael Lynch here tomorrow morning first thing as part of the deep tech track being run in collaboration with Adara Ventures, so don't miss that. So we're thrilled that Vanessa's here to direct and guide the conversation. But without further ado, I'm super excited to announce and introduce to the stage for the first time here at South Summit, it's Francisco Gonzalez, Group Executive Chairman of BBVA, and Vanessa Colomard from Invo Capital.
Buenos dias, good morning everybody, and thank you very much for coming. For the next half hour, I have the honor of speaking to one of Spain's leading luminaries and bankers, Mr. Francisco Gonzalez, who is the executive chairman of BBVA. And as well as being a very savvy banker, he actually started his career in technology, which makes him the perfect guest to have here with us this morning. Thank you. It's not an exaggeration to say that technology today is permeating society in every single way. Banks are no exception. Large companies like Google, Facebook, Amazon, Apple are in our lives daily. I imagine that you might fear an Amazon bank starting next week, perhaps?
Is that a question?
That's the question.
Not really today. Not really. There are 20,000 banks in the world. Most banks won't be able to face to the new world. I mean, what the exponential technologies are posing to everybody, to every sector, and most banks will disappear. But in the banking sector, we have regulators. So regulators will be there for a while because money has to be regulated by default, and regulators will in some way mark the pace of change. I mean, can hold back or speed up the process. That is a very interesting thing, and I probably will elaborate on that later on. But my view is that there are too many banks in the world. They won't be able to compete. Over time, we will see, instead of 20,000, we will see probably thousands, in 10 years, hundreds, and 15, 20 years, dozens. That is the trend of the sector. That means that there will be a new league of competitors, and that league of competitors will be made up by BBVA, hopefully. Other few banks, not many, some startups. Most startups will go bust, but some of them can be successful. And if you are successful in the net, you can be extremely successful. And going back to your question, some giants of the net, Amazon, Google, I don't know, but they will definitely be our competitors. For the time being, they are on the fringes of the banking sector because probably they have a lot of food on the plate. They don't want to be regulated, but it's a question of time. Those guys will be part of the ecosystem.
So what does BBVA do to ensure that it is one of the 20 that survives to 2030?
That's the question. We have been working in what we call the long digital journey for a while. I mean, for 10 years now, working. I'm making a lot of mistakes, by the way. But we started building up the platforms, the IT platforms, both hardware and software. And 5 years later, in 2001 to 2011, 12, we realized that our people were working on the IT platforms, I mean the Ferrari, but they didn't work on the engineers, the drivers, the roads, the signals. I mean, we started with I would say an approach which was too technical. We didn't understand at the beginning of this long digital journey that the approach should be holistic, looking at the entire banking value chain. So in 2012, we replaced our management system, management structure, and we appointed new people. And we realized that we needed to bring digital people into our manpower, and to create I would say a new sort of professionals, new breed of professionals, blending digitals and bankers. Over the last 3 years, we have advanced very much in terms of trying to turn the bank into a digital house. That was our vision back in the day. Turn the bank into a digital house, software house, whatever you call it, in order to be able to compete with the new guys. Our benchmark are not the conventional banks. For us, conventional banks don't exist in terms of future competitors. Our benchmark are the Googles, the Amazons, and those guys. So we are going that direction, and we have a management structure which is made up of engineers, bankers, data scientists, big data specialists, all those guys who understand how should we treat our customers. So we want to be as efficient as Amazon. I have to admit that regulation is very important, and regulation is helping us, to go in that direction, because for the time being, Amazon is not a threat, but it's going to be a threat. So we have to be as efficient as those guys, and I think we can do it because our experience is giving us a lot of data. We, of course, are delivering, a lot of services through the net. By the way, our banking app has been awarded by Forrester as the best app in the world, and that app is upgraded every 3 months. So, of course, we work with Agile, with Scrums, with DevOps, all those techniques in order to have these sort of services.
So you touched on something which I think is very interesting there, which is the new people that you've brought into the bank in the last 4 or 5 years. Yeah. How do you think the sort of new wave of banking, maybe retail, whatever it might be, is going to change the future of work, the future of skills? I mean, I'm assuming that the sort of person you were hiring 10 years ago is now is very different
totally
from
different.
10 years ago.
This is probably, there are a lot of challenges, trying to turn an incumbent into a newcomer. A lot of challenges. Probably that challenge people is the most important. And at the beginning for us was terrible, because we have to get rid of many good professionals, good bankers who didn't understand, the entire journey. So we were forced to bring new people. Now we have reached a critical mass where we are seeing that people who in the past probably didn't think to work with a bank, now they are eager to to get into the BBVA ecosystem. So it's a long process. You have to bring people to adapt, to teach them the banking regulation, blend engineers with bankers. It's a long process.
So do you find it difficult to find people to hire? Are people prepared, or you're saying you have to do quite a lot of training in-house once they're on board?
You have different levels of people. So in our ecosystem, you need the best people, the best of the best, and it's very difficult. We were very fortunate to start our journey back in the day, and over time we brought people into the bank, and we have created, as I said before, a critical mass where people wants to work with good people. So if you have the critical mass as we have today, it's far easier for us to bring people into our ecosystem. Comparing with the conventional banks, most good people want to work with BBVA, not with other banks, because other banks are talking about digital strategy, but they don't have the critical mass we have. If we want to compete with Google and Amazon, and that's what we want to do, it's a little more difficult. And it's going to take time for us to have the same level of excellence that those guys, Amazon and Google, have today. But what we are creating is a new business model, which we will be not a bank, a house where we will advise our customers, trying to help them to conduct their financial life, another part of their lives. And I think we have a couple of assets which the new guys, the Amazons and those guys don't have. For example, privacy, security, regulation. Regulation is really a hurdle for those guys, because you have to get used to working with regulators. You have to spend a lot of money, and you have to have experience. And we have all those assets, and the new guys don't. So I think we have a couple of assets which I hope BBVA will be part of the system in the future. But we have to prove that.
Well, it sounds like you're on the right path. Anyway, let's go back to the app, the award-winning app. That means that you're changing the face of how you're interacting with your customer. Yeah. Do you want to tell me a little bit more about that?
Yeah. We had a physical model where banks went to the branch and and we attended those customers with a physical infrastructure. And little by little, over the last years, we are moving our retail or distribution model based, of course, still on branches, but more and more on mobiles and iPads and that stuff. We have 40% worldwide of our customer base in the digital world. 40%. It's a lot in comparison with other banks. 23% plus of our sales are done through digital channels without human intervention. And that figure is growing at a rate of between 20% in the digital channels and 40% in the mobile channel. So more and more we are attending our customers through mobile. Those customers are extremely happy. Why? Because the pain points come up where there are human intervention. Mm-hmm. When you go to a branch, sometimes you are happy because you have a good service, but the next day there's a long line. The next day our employees are not empathetic enough, and so. What we are learning is the more our customers work with our infrastructures, supposedly our infrastructure work well, and they work well, the customer satisfaction is going up. In fact, and we have the number one in many countries because of the digital channels. So we are giving our customers the opportunity to work in the digital world, and they are eager to get into this world. Our costs are going down, the source of revenues are going up, and we are able to have customers happier, and we are earning more money with those customers. But this is a gradual process because we still have the branches. Of course, we are reducing the branches little by little, and we are in some way creating a new bank and in some way getting rid of the legacies.
So how do you make sure that you don't leave customers behind? My father, for example, does not do mobile banking. How do you continue to service him?
That's very interesting because, of course, we have a lot of experience and a lot of data, and that is a big asset within BBVA. For example, in some part of Spain, we had 32 branches, and we set up a model to slash that number by 1/3. More or less, we closed down 11 branches in one day. And what happened in that area? 50% of the customers happy. No, they went to other branch and they have the mobile, happy. 25% not so happy. They say, okay, I have to change, but they are ready to change because we are, of course, teaching our customers. 25 say, no, I want to go to the branch. And we are learning. The more data we have, the more smart we will be in terms of taking decisions. And at the end of the day, you have to attend your customers, but your customers have to attend the bank as well. I mean, this is a reciprocity. So if you give a service, you have to charge for that service. So there will be a huge amount of, I would say, different models. Some people will go to the branch. They will have to pay for that. Some people have, and we have developed an incredible business model, which is a hybrid, remote assistance. People don't go to the branch, but they have a personal assistant. They know even his name, and they talk or they chat, but they are not going to the branch anymore. So there are different models, different circumstances, but we advance in the digital world.
I find it very interesting, this idea of customer education.
Customer education is very important.
Yeah, you were also telling me about the app that essentially is educating me in my spending habits and alerting me to maybe savings that I need to make now because I've got a big bill coming up. I found that fascinating as well. How does that work?
The app?
Yeah.
Well, the app is incredible, frankly. It's the best in the world, according to Forrester. Why do we have such an app? It's not one day, years of failures or so. The most important thing is when we adopted Agile 4 years ago, and Scrums, small teams which works in a completely different way, and DevOps. There are a huge amount of new techniques. Those guys have the mission to upgrade that app every 3 months. Every 3 months, they have to deliver new functionalities. And it's incredible how those guys are working and imagining new products. The latest upgrade was launched 1 week ago. It's called Be Economy. 1 million people have unloaded that functionality in 1 week, 10 days. And that functionality is one step forward. That functionality is not selling anything. It's just advising, giving the customers data in order to conduct their financial life in a better way. And that app, that functionality predicts his cash flows, gives information about if you spend tonight $200 in a bottle of wine, you won't pay the mortgage 20 days from now. We are giving our customers a huge amount of information because our business model is evolving in that direction. We don't want to be the seller of products. We want to be the advisor of our customers. And that is within our purpose to help people, to bring the opportunities of the new era to everyone. What does it mean? It means that we are building up platforms in the cloud worldwide. We will pick up the best products and services wherever they are. They will be within the ecosystem, not within BBVA. We can be the best innovators in the world. Forget it. What we can do is to pick up the products, to assemble them into specific products and needs for our customers, specific needs and products. And for big data and AI, we can give them the products. If we go in that direction, and we are going in that direction, we don't have a conflict of interest because we won't produce products. We won't just choose the best products for our customers. And that is the platform we are creating. And those platforms will be, there will be few platforms like VBA in the world. Probably Amazon is going to be there as well.
Yeah.
But it's a very daunting task, and it's out of reach of many, many banks today.
So as you become a banking platform and you therefore rely far more on our data, customer data and algorithms, is there a fear that the algorithms start to make decisions that aren't profitable for the bank?
It's possible, but we will try not to make those mistakes because we elaborate algorithms and we launch those algorithms within the products, testing the reliability of those algorithms, and we have beta testing, we have trial and errors. Okay, it's an ongoing process, and of course we have human beings, engineers and mathematicians and people who control, how the algorithm is working with our customers. Yeah, it's a tweaking or a tuning process. Hopefully we won't make many mistakes, rather the opposite. If we have good algorithms and we work in that direction, we will give the opportunity to work with a bank to many people who today is impossible because costs are very high. We are reducing the barrier of entry for many customers which are low income, and we can deliver products at very low cost. So I think that is good news for everybody.
So to your point that regulators today are helping you, as it were, in that they make it hard for incumbents to break into your sector, how do regulators keep up with your model of banking, your new platform, the fact that everything is going digital, data-based, etc., and is probably much harder to keep up with the speed at which things are changing?
It's a very important point. Today we have a meeting which is the digital regulation. I personally attend that meeting. We spent 2 hours with several people just working on that issue this morning. It's very difficult because people don't want to change by default, by nature. Regulators are people, so they don't want to change, and they control. They had and they still have, I would say, a comfortable life because they have they pull the strings and they call the shots. Now there is a new world emerging, and they know that world is going to change his function, his job. And now they are quite open to talk to, basically with us, because we are the only bank in the world able to talk to them and to give information. We prepare seminars, and we have a huge amount of people working with regulators. And they are open to our ideas. The problem is to write down the rules. And that is completely different. So they are trying to write down some rules. For example, in Europe, we will have the new data law, which allows third parties to get into our database with the consent of their customers and to extract value. That is going to be a big revolution for the banking system in Europe, not in the States, but for the time in Europe. So regulators try to advance something, but they are asking a huge amount of questions about things which should be understood by them in the past. For example, they want to see the computers. But the computers are not here anymore. The cloud, this is the cloud. What's the cloud? Okay, we have to teach them how the cloud works. There's a huge amount of, a big gap today in what we are doing and what the regulators know. So our task is to narrow that gap in order to have a more fluent conversation and to teach them that they have to change, and they are ready to change. But it's going to be a long, long battle. For us, our position is we love competition. Competition helps you if you are ready to compete. Otherwise, you'll sleep a little bit. But we want to have a level playing field. You have to protect consumers. You have to protect financial stability, privacy, security. But you can't stifle innovation. So you have to reach an equilibrium in order to have a level playing field. It's not easy. So we have to work a lot with politicians, lawmakers, and regulators in order to have a real world where you reach a trade-off between innovation and, I would say, protection.
Now, you sit at the top of an international bank, a global bank. We have a probably very global audience here. How do you see the difference between traditional European markets and then the more innovative, maybe emerging markets, particularly Latin America, where you spend a lot of time?
Generally speaking, emerging markets are far better prepared than developed markets to change. You know, because you know why? Why? Because they have nothing, and they get the state-of-the-art technology. If you go to Kenya, you have the most advanced remittance system in the world because they have nothing and they use the mobile to do so. If you go to China, you have Alibaba. Everybody knows what Alibaba does, but Alibaba now is one of the main banks, the main competitors in China, because payments, for example, in China is made through mobile. Why doesn't that happen in Europe? Because we have cards, credit cards. So we are a little slow to take innovation because we are more or less served by the banking system. So emerging markets are really have a big opportunity. In our system, BBVA system, we have Guarantee. It's the third bank. It's the most advanced bank in the world, not just it's the best bank of our BBVA ecosystem. They have 50% of their clientele working in digital. If you get into a Guarantee branch, you see no papers at all. When you get into the bank, if you carry some sort of mobile whatsoever, employees know who you are, and they serve you better than others because one are customers, others are not. It's an incredible bank, and it's in Turkey. So emerging markets have a huge opportunity to make headway in this regard.
So as we've all gone digital, now that we are all digital, how worried should we be about cybersecurity and breaches in that regard? Is there a way of protecting ourselves that we're not doing yet?
Cybersecurity is the main threat we have to attend. It's the main. I was in Israel 10 days ago, and I spent 2 days, just visiting startups specialized in cybersecurity. You know why Israel is a specific place? Because they are forced to be very smart from the beginning, and because of the army structure, there are a lot of people working in cybersecurity. It's the main threat, definitely. But you have to live. You have to get used to living in such a sort of environment. I presume that when the first cars started to go down the road, there was some accidents, and some people said, okay, stop those cars. Other people said, no, limit the damage. And this is the same with digital. We have to get used to living in that environment. We, of course, are spending a huge amount of money in cybersecurity. And now we are again in the number, reshuffling our management team in cybersecurity again and again, and attracting people who works in other parts of the world. We know that we will be breached. We are attacked every day, of course. For the time being, cross fingers, we haven't been breached in a material way. We will be breached sometime. So we have drills, and we try to prepare ourselves physically and mentally for that moment. Our strategy is, okay, we will be breached, try to limit the damage. That's the main point. The most important thing in cyber attacks is that they get into your system and they are dormant for a while, and they can be 2 or 3 months, and they start to know you exactly what you are doing, and they start to extract information into validity that you don't realize what is happening. Remember Equifax, what happened in the States. So you have to be prepared in order to know when you are breached and to detect that you have been breached. And okay, I don't want to elaborate on that because it's going to take me hours. But now that world is changing very much. In the past, we were just passively waiting for being breached. Now we are more reactive, putting poissons and going out of the city, because I'm city, I mean, we have the walls and so, and we are going to the bars in order to see who will be the next enemy. So very actively working in that regard. So it's part of our life. We have to accept that the danger is there. Of course, authorities have a lot of work to do in that regard, because cybersecurity is a new risk, as probably wars were in the past. And what happened? Nations created NATO, are creating international bodies in order to be protected. We need to see some sort of bodies being created in the future.
Mm-hmm. So it's time, I think, for the last question. There might be one of the future 20 banks that are still around in 30 years' time sitting in the audience. What advice would you give to a fintech startup today?
To the banks?
Yeah, to a startup, one of the hopeful future players.
Yeah, I love startups because, if you look for innovation, look at the startups. Innovation, and we have our own startups created within the bank. We have bought several startups all over the world. We have new banks. We have a lot of things in that ecosystem, and we are very active. We have a hub in San Francisco. We'll create a couple of more hubs in other parts of the world. We are very active for many years, not for months. So the world of startup is absolutely necessary for the mankind, for everybody. I said before, most will go bust. It's inevitable. But that's life. That's life. We will be, startups for us will be incredible partners, and we will work with them forever. I said before, we will pick up the best products or so within that ecosystem. We won't produce products in the future, so we will partner with them. And some of the startups will be extremely successful. But the digital world means, by nature, a reduced number of players. There is no place for everybody, because it's a global world where you have to be the best. Otherwise, you won't compete. In the past, people could compete not being really good because they didn't have competition. But now competition is very transparent.
Yes, I think the audience knows that. Thank you very much. It's been a fascinating conversation.
Thank you.
Thank you.
Thank you.
Excellent. Wow, what an exciting and interesting conversation. It's just amazing to see the ability of BBVA with their long history to think about changing. Folks, sit down. Where are you going? 1 second. We have one more brief and super exciting segment here right before we go to lunch. This next segment is our first talk as part of a program in the track for art and culture in tech, which is taking place for the rest of this afternoon in the Sandbox stage. But before that, and just before we go to lunch, we have an incredible innovator who's flown all the way in from New York to be with us today, who is one of the leading visionaries in the world of art and technology and has built one of the world's biggest global platform for collecting and discovering art and new artists. A massive industry and a massive world out there that, like a lot of different industries, is absolutely ripe for innovation. Our moderator here is the founder of a company called The Artian, which is a super interesting firm that is working with corporates, large and small, to understand how to introduce creativity and art and practices from the world of art into the world of entrepreneurship and innovation, and introducing that creativity into the processes required. But without further ado, please join me in giving a very warm welcome to our next speaker, who is Carter Cleveland, founder of Artsy and Nir Hindi The Artian.
All right. So art in tech, that's what we will have in the next 20 minutes. And before I let Carter kind of introduce himself, I actually want to introduce you to the company he founded called Artsy. And Artsy is the global platform, I think, the biggest marketplace for collecting and discovering art. Now I'm going to read you some of the numbers of Artsy, and stay with me because they are impressive. So they host over 160 auctions, both live and online and offline. They have more than 2,000 global partners, including the top museum in the world, the Louvre, the Guggenheim, and more. They work with over 60 different international art fairs, including the Armory Show and Arco. They spread across 90 countries, and they have more than 800,000 works of art on their platform, valued more than $30 billion from 70,000 different artists. After raising $100 million from what I call the A-list of investors, such as Jack Dorsey, co-founder of Twitter, Eric Schmidt, chairman of Google, Joe Gebbia, co-founder of Airbnb, Peter Thiel from PayPal, Bob Pittman, co-founder of MTV. Carter, I want to ask you, what brought these people for Artsy? What is Artsy?
Well, that's a very nice introduction, Nir, and it's an honor to be here in Madrid and to get to soak up the energy here. I've actually never been before. I think one of the reasons why we've been able to attract such an incredible list of not just investors, but really just the people that actually work at Artsy, the team that makes all those numbers possible, is that I think people are very attracted to the scale of the vision and the impact that it can have on humanity. Artsy started with a very simple premise, which is, why is there not one website where you can find all the world's art, where anyone in the world, as long as they have an internet connection, can learn anything they want about all the world's art? Anyone who wants to buy art, who wants to sell art, they have one place they can go. This is a world that's clearly going to have many more people engage with art, many more people buying art, and ultimately many more artists in the world able to make a living and pursue their passions in a more sustainable way. And it's a big vision that attracted a lot of people. And I think that was actually what I was drawn to in the beginning as well.
So it's interesting because you are kind of what's connect the both what I call right brain and left brain, and it seems that we are living in time that we kind of focus only on one side of the brain. You are a computer scientist and you are deep rooted in the art, and it's kind of all the time made me wonder also from my own experience that entrepreneurs and artists are much more similar than what we tend to think. But why is it that we kind of see them so separate? Why art is so separate from entrepreneurship and technology?
It's a really good question. At Artsy, our core value is actually art meets science. You can even take our logo and extend it to say that core value. I think it's a great question, because art and science actually used to be much more related. If you think about the Renaissance, you think about the prototypical Renaissance man, Leonardo da Vinci. He was both an artist and he was both a scientist. And in fact, for him, they were not even different crafts. His science was his art. His art was his science. I think in modern day society, because there's been so much emphasis on success and on scaling and on trying to be a professional in a world that is getting exponentially more complex every day, there is this need we feel to be highly specialized. And so a lot of children, they go to school or they go to college and they're forced to make a decision. You choose now. Are you going to be creative, become an artist, and probably not, make a living? It's a very daunting thing. Or are you going to go into business? Are you going to learn numbers? Are you going to learn how to scale things? And only now, I would say, in technology, are people starting to understand the core relationship between the two of them. I was very lucky. For me, my mom was in finance, and her father, she comes from more of that business side, her number side. Her father was a physicist. Her grandfather was also a physicist. They actually came to Europe before she was born. And so, she every day walked me to school on the way to work, and she quizzed me on math problems. And that's actually why I went to Princeton, because it had the top physics program. I thought I was going to be a theoretical physicist when I grew up. But things didn't turn out that way. And I think the reason for that is because I had a different influence coming from my father. So my father's entire life has been about art. I grew up in a bedroom covered inch to inch with canvases. I never even had posters in my room because I already had, like, we didn't have space for paintings. They were on the chairs, they were on the furniture. You couldn't even sit down in our living room. There's so much art everywhere. And so he was always taking me to galleries, always taking me to museums, always talking to me about the art. And so for me, growing up as a child, art was this thing that just, it was easy. You know, everyone had access to it. There was no feeling of exclusivity or of not being cool enough. You know, I never felt like I couldn't ask stupid questions. I remember saying to my dad, "What's the point of that artwork? Like, I could do that." And then he would very patiently explain to me why I could actually not do that. And having that patient, loving guidance from a young age made me think of art the same way most people think about music or think about film. And it was only when I got to college and I started talking to more people about art that I realized that was a very unique experience. Actually, most people, when you ask them about art, you say, you know, who's your favorite musician? Who's your favorite DJ? Everyone has an immediate answer. You know, what's your favorite film? Oh yeah, we can talk about film, but who's your favorite artist? And people might take a little bit longer to get back to you. You know, oh, I don't know if I know art as well, or I don't know if I'm cool enough, or there's almost this feeling of art being this insular world that you're on the outside of. And when I started to realize that this thing I just took for granted, easy access to art, was actually a huge privilege, and most people didn't have that access, it kind of started me on this path, saying, well, why is art being treated differently? And I think the answer is really about access. You know, you go back 100 years, and the music world was actually smaller. If you go back before the record player, before the radio, the music world was smaller than the art world was today. If you wanted to go see a musical performance by professional musicians, the chances were that you were part of a small elite class. You were a part of the aristocracy. It was really only with the radio and the record player that music became a mainstream thing, and now no one can imagine life without music as part of your daily experience. But the radio and the record player, they work for audio, but they don't work for visual. They don't work for communicating images, and that's why the internet now is changing everything. And that's why art is starting to become a much bigger, a much more ubiquitous part of the human experience. And all Artsy was trying to do was say, great, let's be that one website that anyone can go to, like Spotify or Netflix for music and film, one place they can go to for art.
So it's kind of I want to ask you the next question, because we talked about it in previous conversation, and you know, it seems that we are living in such a different economy that the skill set that we need is different, and the future is kind of very blurry. And you all the time speaks about the next human evolution. And I'm interested to know, what is this humanistic evolution that you see in your eyes?
Yeah, I love to talk about that. Well, first, before I talk about a very lofty topic, such as the next phase of human evolution, I'll talk a little bit first about what is just art's, if we're going to talk about what art's role is on humanity at a global scale, it's useful to understand what is art's impact on an individual human scale. Like, when you actually look at art, what is happening? Is nothing happening, or is it changing you? And there's actually been some really interesting studies that have looked at the impact of art in a lot of different contexts. They've looked at the impact of art on people, elderly with cognitive diseases like Alzheimer's or dementia. They've looked at the impact on communities and crime rates. They've looked at the impact on children and empathy. And every time they've actually found that there's very striking patterns. It turns out that whenever you see a new work of art, I mean, or even, you know, art and music and film, I mean, they're all kind of converging into, you know, self-expression. Whenever you guys hear that amazing new song that you've never heard before, and you go, wow, like, how did they even come up with that song? Or when you see that beautiful artwork, where did that even come from? So that reaction you're having, that moment of awe, that experience you are experiencing consciously has a physical analog inside your brain. Whenever you have a new experience, you're exposed to a new idea, new pathways are physically being formed in your brain. New neural pathways are lighting up, and they've actually shown this in an fMRI. And that's why if I show you the same artwork again tomorrow, you might still think, yeah, it's a great artwork, it's beautiful, but you're not going to have that, wow, I've never seen that before reaction. And the reason why is because those new neural pathways have formed. And so when you see that same work again, they map into the same neural pathways you already have. Every time you see something new, or you experience something different, whether it's a new song, a new work of art, a new idea, a new concept, a new belief, new neural pathways are formed. And previous neural pathways have to adapt to these new ideas. That's why if I was to tell you guys something that you did not enjoy hearing that went against your existing belief systems, the reaction that you would have if you put your brains in an fMRI is no different than the reaction of physical pain as if I pinched you. Being exposed to a conflicting viewpoint causes certain brain structures that were in place that allowed you to hold the previous viewpoint, it forces them to break down and change, or it forces you to, no, that's a dumb idea, that's clearly stupid. You know, how many times have we written off an idea we don't like? Or how many times has our idea that we've shared with someone else who doesn't agree with us, how many times have they written off our idea because it conflicts with their previous belief systems? This starts to help us understand the power of self-expression in art. It's not just a nice thing. It's not just a way to blow off steam. It's not just a thing that rich people can spend their money on. By actually expanding the neural pathways in your brain, art, music, film, they are expanding our consciousness, and they're also helping break down old ego structures. They are making us more open-minded to new ideas, to new thoughts. They're making us less brittle and less resistant to our old thought patterns. They also expands empathy. There's been studies where if you take groups of children and you have them do random activities like communal activities or building activities, but in the case where they have children listen to music or look at art, afterwards when they test their emotional intelligence after several days of this, the children that were exposed to music or art, their emotional intelligence and their empathy, their ability to work together as a team is actually much higher. This is another property art has. It doesn't just expand consciousness. By seeing an artwork, you're able to see someone on a very human level. You're not seeing them, oh, they have this political belief, or they're that religion, or that sexuality, or that gender. When you see their art, you see them on this very pure human level. It allows you to connect with them as a human without all the barriers of labels and concepts and judgments that we put between ourselves and the world around us. Art is one of those powerful global diplomats. Artsy actually has the largest average transaction distance of any website in the world, over 3,000 miles. Why is that? It's because people are inherently attracted to art and experiences that are from different cultures. I love to go search through the art that's from new emerging artists in Berlin. It's a way for me to go on a journey without having to pay for an expensive plane ticket. It's a way for me to understand. I'm so excited to see the museums in Madrid. I'm visiting a museum today and a different one tomorrow because I think it's actually one of the most powerful ways to understand someone's culture. Art is the ultimate diplomat. It lets you see other people, see other cultures from across geographic divides. Now, why is this so important for where humanity is today and where we're going to be in the near future? So this is where it's going to get a little bit out there. And this is not Artsy's opinion, this is my opinion. So feel free to disagree, but I think it makes for a good dialogue. So I actually believe that's what is going on in our lifetimes. That what we will see in our lifetimes is that we will get to be the last generation of humans. I don't mean that in a negative way, I actually mean that in a positive way. I think where we are today is actually quite similar to where life was about 2 billion years ago, when single-cellular organisms were cooperating and collaborating, and then they started to share DNA with each other, and then they started to reproduce, not as a single-cellular organism, but as a multicellular organism. And if you were to be in space looking down at humanity from above, you would see all these individual humans, and then all these individual tribes, and then these individual villages, towns, cities, nations, and now you see a thriving global economy that is starting to more and more resemble a gigantic meta-organism. instead of individual human consciousnesses, one might call us a giant collective consciousness. And I actually believe that this collective consciousness that we are increasingly becoming a part of is actually going to merge not just all humans together, the same way single cellular organisms start to merge together and form multicellular life, but I believe it's also going to be a merger with the technology that we're building, with the artificial intelligence, and also with the intelligence that's in nature, that is in the planet all around us. In Silicon Valley, you hear people talk about the singularity, which is the idea of when artificial intelligence will become so advanced that it becomes more intelligent than humans. But I think that is only one component of this collective consciousness. That is the artificial intelligence component. But this singularity point that we're heading towards will actually be the merger of artificial intelligence, human intelligence, technology, and also the natural intelligence in nature. So on one hand, what does that actually mean in practice? Well, it's really hard to know. If you were to ask those single cellular organisms, well, what's life going to be like when you're multicellular? They wouldn't really be able to tell you. You'd say, well, you're going to be able to create art. You're going to be able to send people to the moon. You're going to be able to write poetry. And the single cellular organisms might say to you, so does that mean there's going to be more glucose? Their only way of conceptualizing these things is through what they already know. So it's like, so more glucose. And you're like, well, there might be more glucose, but there's so much more than that. The point of this is it's very hard for us as individual humans to understand what this next great phase will look like. And that shouldn't be surprising. Ask people from 20 years ago. What would the world look like just 20 years later? Before the internet, before iPhones, before apps. All those things happened in under 15 years ago. And they would have trouble telling you what life would be like just 15 years in the future. So what do we think life will be like 30 years from now, as these technology cycles continue to accelerate? My point is, it's in a very exciting, but also a very scary time. Because on one hand, while we have global connectivity and global culture and global innovation, we also have a lot of very scary things happening in every part of the world. You have a lot of people who are scared and are resisting this next phase, this coming together, this convergence. And you see that all around the world in various different, often very disturbing ways. And this is why I actually think art is not just a nice to have, but I think art, technology, and innovation right now are must-haves in order to enable us to safely come together and transcend into this next phase. Because if art on an individual human level allows us to have more empathy and more consciousness, it's also an agent for doing that on a global level. I remember going to the Venice Biennale in, I believe, 2014, or was it 2015? And I remember that India and Pakistan had each chosen artists to represent their country. And those are two nations that have a lot of historic tensions. And so it's an interesting question, how would the artists respond to that? Well, the artists decided to work together and create a joint artwork together, where you walk into a palazzo and via a sort of virtual reality installation, it transports you to another room on the other side of the world in Pakistan. And I thought that that artwork was such a fitting metaphor for the power of art to connect us across divides, for the power of art to heal wounds, for the power of art to create greater empathy, not just on an individual level, not just on a national level, but also on a collective level. I think it's very important that if we are going to make it into this next phase of, we don't know what it will be like, but for us to get there safely, I think art, not just technology, is going to play a very critical role there. And so I guess I hope everyone in this room can look for ways not just to keep innovating and advancing your businesses or scaling your businesses, but also look for ways to bring in more art, more creativity, not just into your personal lives, but also into your businesses and into your communities, so that we can all, hopefully face this new world more together with more empathy.
Great. So with that, we already finished our short time, but we will continue on the Sandbox stage with more art and culture in tech. Carter, thank you very much for coming to Madrid and sharing with us everything you know about art.
Thank you for having me here. I appreciate it. Thank you, guys.
Guys, thank you so much. Incredible. I love it. Brilliant. Thanks a million, Carter. Take care. Folks, that is it for the first morning here at Arena at South Summit. What mind-blowing concepts were presented to us there. That's good food for thought to chew on over lunch. We will be back here on this stage at 3:30 with the CEO of one of Spain's biggest tech companies, eDreams, so don't miss it. We'll see you then at 3:30. Thank you.
Just to try to see it clearer. My breath float out the class, and so I drew a new face and I guess what I'll be saying this left to be a reason to read the state of vanities and just go with the seasons. It's what we aim to do. Our name is always true, but I won't hesitate no more. Our time is, I'm yours.
Gonna change my mind, you better stop what you're doing before you do it all wrong again. Get right this time. See, you better stop what you're doing before you do it all wrong again. Get it right this time. never gonna end. So don't be afraid of what the nighttime may bring. You must understand that you can dream of anything. So fall into sleep peacefully. May this journey help you fly. When you can't hold out much longer, don't you cry. When the darkness is getting stronger, sleep like a child, peaceful and deep. And when you lay it down, I pray your soul to keep. Sleep like a child, peaceful and deep. And when you lay it down, I pray your soul to keep. You won't be alone, for I will not be denied. Under the darkest of skies, I'm gonna be by your side. So fall into sleep, peaceful and